Morning. How are we all doing? Made it. Been to the gym. Sorry. How's everybody doing? Morning, 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 morning. Morning, Kennelly, Virginia, JC, Amy, Whipping Post. How are we doing? Sounds like there's two sound files playing at the same time. Oh, yeah. You're right. There you go. Turned one off. Well spotted. Mixed and compiled by me. Yes, I am not a mixer or compiler. I just had two. I redid the video, the intro video, and I had them both running on the stream. That's stupid. Well spotted. Morning, Jabor, Gabor, John, Ulam, Danny, Martin. How we doing? Right. Let's quickly have a look at what's going on with stuff. Morning, Neo. So Aussie New Zealand yesterday, we had a little bit of a respite. Not really had any rest proper, what I would call rest yet, but it is my epic pen sideways. So yesterday's high, basically, whenever you're going to get to the end of a squeeze, there's always an end to the squeeze, and the end of the squeeze is always quite often yesterday's high. The final push tends to be a fairly decent sized candle that the market pulls back from, where we go, we've run out. And then the next candle tends to be a bear candle. So yesterday's high is today's sort of point of no return. So again, I've got an aggressive drawdown control position on this one here. And stop above yesterday's high. Have another crack at aggressive on this. It's just not stopping this Aussie New Zealand at the moment, but we are now so many days up. Look, 1, 2, 3, 4, still higher, high, higher, low, 5, 6, 7, 8, 9, 10, 11 days. This is day 12. So we will typically end with either an inside bar or a lower high, lower low. And that tends to be when you'll get the move down, look. So finish, and then you get a lower high, lower low, yeah, or an inside bar. So basically, we'll see what happens today. There's no news catalyst today. We've got the SMB chairman talking at 1 o'clock this afternoon. We've got unemployment claims at 1:30 ahead of the New York Open. So there's nothing for the Australasian pairs, obviously. There's nothing for the European pairs at the moment either. So it's all about the US dollar CAD at the end of this week. Obviously, we had the CAD rates yesterday, so we'll have a look at those in a minute and see what's happened with those CADs and where we think those are going to go. Overnight news, I haven't even looked at this yet, so let's have a whiz through. Last yesterday. GDP up for the yen. News. Okay, so no news. That's good. That gets that out of the way. 5 minutes to go. Morning, everybody else who's just arrived. Morning, Steve. Morning, Brian. Doreska. XRupdate.news. Morning. So didn't bank anything yesterday. Drawdown control again yesterday. This is, I said yesterday, this is probably one of the nastiest squeezes I've been in for a while. Not because of the fact that it is squeezing. It's the shape of the squeeze that makes this particularly nasty. Just that gradual grinding of price to the upside with absolutely no respite whatsoever. It's barely putting in a new low. It just doesn't put in new lows. It's just a horrible shaped one. I'm happy if it goes parabolic. The more parabolic it goes, the more happy I am. That's fine. Big parabolic moves run out way faster. This is a slow, when you get these slow incline moves like this, these grinds, they can go on for as long as they want to. Yeah, because what the market is doing is buying and selling and buying and selling and buying and selling and buying and selling and buying and selling, rather than buying, running out of people that are willing to sell to them. Okay, let's get out of it. This is constant buying and selling. At some point, they will run out because the people are getting run over constantly. But they just don't seem to want to stop. If you look at the retail sentiment on this, you've still got 98% in the market stupidly selling the crap out of this. Like, guys, stop. You not realize you're just putting liquidity in the market for these boys to push, so stop it. You had a megaphone, you could talk to retail and go, oh, stop it. But you can't. Anyway, sorry, that's a very British thing doing that. If you're not from England. Morning, Zico. Outro, how you doing? Morning, Sego. So that's pushing hard. We've got no ADRs today. The weeklies we'll have a look at in a second. Obviously, none of the strategies are doing well at the moment because they're being squeezed. But ADR reversals is actually doing all right. ADR reversals obviously get in and get out a lot faster because they're scalped. So that's sitting in 1.89, 175 banks yesterday, nothing this morning. So positive all week on that. So that's going very well. Online for 15-20%, as you would expect. H1, obviously, we are getting crucified on Aussie New Zealand. So this is a bit of a double-edged sword, the way this is working. I'll talk about this in a minute. But the scaling out as you go thing is something new that I've started doing in the last sort of 6 months or so. The downside of it, I'm finding, is in a grinding squeeze like this, it's constant pain. However, when the market is working normally, it's constant profit. So there's 3 states basically in position trading. I'm going to talk about them in a bit. I don't forget. H4, that's the H1 mean reversion strategy. This is the H4 mean reversion strategy. Again, same thing. So you're going to get the same thing on H4 as you are on H1. It's just on H4, it was already in drawdown before this thing started. So this thing is just dying. I'm not doing any drawdown control at all on this. So obviously this is just running away. And hedging, a little bit of a scale out yesterday on the hedging. That's struggling again at the moment because obviously it's over leveraged on odd and it's getting squeezed. So there's nothing particularly bad on this one though. If you look at all the pairs on here, if you're using the hedging strategy, there's nothing that is out of control on this, as the Aussie New Zealand is on the H1M5 and H4. It's in sort of everything's sitting sort of 1.5 to 3%, which is kind of normal squeezed drawdown. So there's nothing out of control on this one at all. It's always sitting in 5 to 20%. That's where it lives. So it's just normal, but it's just not managing to bank much this month either. So, right. So we'll see how we get on with that this morning. There's your ADRs. It's flat. We have 12 seconds to the open. Let's whiz over to the DAX. So going to take the pre-market. I fixed the EA yesterday. I know what the problem was. I left a bit of code in that I completely forgotten about. So I fixed that. There's your pre-market open on the DAX. So I will stop sweating at some point. Just gone long. Well, that's a nice one today. Look at that. Straight up target. Go on. A little bit more. So that's the gap fill done. Go on. Taking one off the funded, just in case. When it's real money, this is the difference between trading demo and trading psychological, trading real money. When you see that on a real account and you see $1,200, as I just saw on my P&L there, when it's that far away from your TP, as a human being, you go, nah, I'm taking it, right? The EA doesn't do that, obviously. So I've just banked half of that position there. The second half is safe. So I've just banked just shy of $600. The other half, obviously, I've let run. So if this stops out a break even on here, that's fine. I'm testing, obviously, this version of the EA out. But that's the difference and why you will never achieve what you do with backtesting if you're watching your charts. If you let an EA run 100% on its own, I know that many times when we've got to these gap fills, we've bounced out of them because what the market's doing is it's just filling the orders overnight in the difference between the market prices. And you will often get the gap fill and go, yeah, or gap and run as they call it. The EA, you can't really teach it to do that. You can teach it to do that. Obviously, there's an awful lot of extra code and crap in there. But so I've taken that, rightly or wrongly. The difference for me is $150. So it's either bank profit this morning or risk not banking profit for the sake of $150. You're never going to do it, are you? I could have banked 1,200 there, but I'm letting the second half run to see if I can get the runner, if the runner goes. But it's a very different thing. This is why I'm not a fan of trading demo accounts. People like go in demo and trade demo. When you're trading demo, you go 25 lots. Don't care. Doesn't matter, does it? You'll never do that on a live account. If you're trading a demo account, you're never going to experience the psychological pressures that go with trading that you're going to get with a live account. They go TP hit. So TP hit on the DAX, TP1, second locked in, guaranteed profit this morning. Done, dusted. End of session. Bye. Right, so that's done. We'll have a look at that in a sec. Let's have a quick look at where we're going on the DAX. Get that Euro CAD out of the way. Jeez. What's going on with the Canadian dollar? Or is that the euro? Looks like a weak euro this morning. Yeah, weak euro. Obviously, Canadian dollar looks like it's powering up. Yeah, so we got a strong Canadian dollar move to start the morning, and the euro's weak. So euro CAD, obviously, look at the spread on that thing. Not a lot of liquidity there either this morning. So let's look at the DAX and where we're potentially going with that one this morning. So DAX, obviously, gap fill's done. There's your pre-market 15 break, obviously to the long side as well. So gap fill is complete. Obviously, we've got previous day's high and yesterday's high as upside targets in that propulsion gap. So there's your accumulation break and the propulsion gap. That's been tested twice, rejected. So it's more likely we're going to get a downside move. There's the gap fill completed this morning that we were looking for on Monday and Tuesday. We were looking for that gap fill. Didn't quite get it on the Tuesday. Didn't quite get it yesterday. Now it's filled. So the gap fill's done. 3 days. As I said, 78% of gaps get filled within 1 week. This has been less than a week. Gap is filled. So that's done. So the market basically now is here ready to do something. It can run the highs. It can run the lows. There's nothing to aim for now. We're complete. So the gap fill to the upside and the gap fill to the downside are targets today. Go with momentum, whichever way this decides to go. So stopped out in the second half of that position. Pending's deleted. It's working. I need to test it this afternoon as well across these three. So if these three trade properly this afternoon, I think it's pretty much done. Oh, I forgot to copy the files over. Did I not? One sec. Okay, I put some logging in basically yesterday. Just wanted to make sure the logging is working. So it's telling whenever it does an action, it's telling me what it's doing. So that's deleting the pending inside bar if the profit is above 0, which it is. So that's why that's closed. So I'm just making sure because yesterday it closed some orders out and I couldn't remember why. So I've just put loads of logging on. $900 in the morning. Right. So ADRs, DAX obviously looks like it wants to go short. So if you want to take another trade today, if you want to take the 15-minute ORB, whoops, the pre-market 15 ORB has already triggered long, probably stopped you out of break even, maybe small loss. There's your 5-minute ORB. So if you want to take the 5-minute ORB short, the trigger's there, and the 15-minute pre is there. So if we are going to go short, those are your triggers to go to the downside. And obviously, target-wise, I mean, you got propulsion. That's not really a propulsion gap. It's just part of a V-shaped move. So ADR, isn't it, today? ADR, those lows is 125 ADR, and then last month's low. No real obvious stopping points to the downside. So there's you know, this thing could just go wherever it wants to today to the downside. Upside, we're looking at yesterday's high and previous day's high. That is here. Within ADR. Right. Just catch up on the chat quickly before I do the pairs. Outro. I don't trade trend lines, but have you seen how well the bottoms join up on US dollar CAD daily? Whoops. Yeah. Series of higher highs. That is a symmetrical triangle formation. So 5. So the next break will be the entry, basically, on this. So if this breaks to the downside, I would expect to run down. And if it breaks back up here, if it breaks that high there of level, sorry, it's not there, level 5. So this is 5, which is the previous month's high. It breaks that high, I would expect it to run out and target 3 and then target 1. If you want to trade symmetrical triangle pattern strategy. There you go. So it's a symmetrical triangle break as well. Potentially. Yeah, it looks good. I don't trade them either. I mean, all a trend line is a dynamic support resistance. So this is an uneven W. There's 3 types of reversal pattern. Double bottom reversal, which is obviously a horizontal trend line. You've got a stop run reversal, which is a descending trend line. And then you've got a higher low reversal, W pattern, which is an upward trend line. This is a upward one. Well, actually, it's actually a double bottom, but it's an upward one there, followed by it. So it's basically what it is this. Higher, double bottom. But it's all reversal. So if that low breaks out of that symmetrical triangle, you've also got a mini symmetrical triangle formation forming there, but it's not symmetrical. It's more of a downward wedge, but looks bearish to me. Right. There we go. We went off on a bit of a tangent there, didn't we? Can't wait for that to break. Exactly. Yeah. I can because I'm long on it at the moment. I'm just hoping we're not going to get another Aussie New Zealand. The US dollar CAD is very similar to Aussie New Zealand in the fact that these two are massive trade partners and they tend to range a lot. Those two are massive trade partners and they tend to range a lot. When one of them takes control and they go into a trend, quite often squeezy. So just hoping we don't get a US CAD squeeze as well. That would be bad. Who knows? CAD Swiss. We're going to cover CAD Swiss in the H4s in a second. Welcome, top morning, Steve. Oh my God, wet hair. Thursday already. It is, yeah. GN gap there. Can't see any gaps. Well, there's a gap, but that was off of the news. That's just broker. It's not a gap. Right, so let's cover the weeklies quickly first. So Aussie CAD, we know this obviously hit the weekly. The trade was yesterday, and the news basically reverted it. It didn't revert because it hit its weekly range. It reverted because of the news. So just if you were taking a weekly reversal on it, you're out already. Aussie dollar, New Zealand dollar. Obviously, we know that one is the weekly hit to the upside. Please come down today and stop mucking about. I'm fed up with you. I've had enough of you. Stop. I'm following this in the last, I would say, 3 years. I've been through, I would say, probably 4 nasty squeezes. US dollar, Swiss, Aussie New Zealand, CAD yen, and Aussie New Zealand again. I'm fast falling out of love with this. This has been responsible for 2 of the nastiest, horriblest squeezes I've ever been in. This isn't the nastiest, horriblest squeeze I've ever been in, but if it does continue, it's going to turn into it. And it's the Aussie New Zealand again. And it's fast making me think, do I really want to trade this? Because it's very similar to the Euro Pound. Euro Pound, US CAD, Aussie New Zealand. Those 3 pairs are very rangy because they are close trade partners, next door neighbors. Their economies are very interlinked. Therefore, their currencies are interlinked because there's no advantage in one of them being stronger than the other because it makes the other one poorer. It makes them both poorer. Yeah, so if you got the Aussie New Zealand, right, if you got Australia selling a load of stuff to New Zealand and they put their currency gets stronger, New Zealand go, well, it's not really much point in us buying stuff from you, is there? Because your exchange rate's too high. And they go, all right, and they bring it back down. So you tend to find them like that. Same with the Euro Pound, same with the US dollar CAD. When you get a fundamental shift where the market says, we need more money here because of this, and one of them gets stronger because of that, and it has nothing to do with trade and keeping relations happy, they trend like crazy. As you know, from the Aussie dollar New Zealand, when we looked at the example from previous, yeah, this thing trends. It trended for the entire year. And then it did that. Yeah, and this is the problem. It tends to be range bound a lot of the time. Yeah, but then it's the trends when you get them tend to be very nice, easy trends to get in and out of, or they are completely range bound. Yeah, then you get this fundamental thing where it goes parabolic. And it's only these pairs that really do this. So if you cut out Aussie, New Zealand, Euro, Pound, and US dollar CAD out of your portfolios, you'll probably find, I think I'd find, I'd get into much less problems. But anyway, nothing we can do about it. So there's your weeklies, hourlies, and 4 hourlies on the RSIs for mean reversion. There is no H1s today at the moment. We'll have a look at all these CAD pairs in a second, just to see what the reaction is on the CAD for opportunities as well that aren't related to mean reversion on the RSIs or ADRs. Aussie dollar Swiss, that is still extended on the 4 hour. So we've got divergence formed now from here. Yep, so that's a massive incline, but the RSI, the strength within the currency is weakening, but price is rising. So that is bearish divergence. We are up at a nice level at the moment. We are lacking European strength at the minute, which is causing the Swiss franc to be weak. So we should be getting that euro strength coming through. The fundamentals are all right for the Swiss franc and for the euro. So the euro has got another at least 0.5%, probably more to come, bullish. Same with the pound. The Swiss franc is related to what goes on with the euro. They had a pause last time. However, they are on top of inflation. So there's just not really any point in them going any higher with interest rates. However, when the euro does, the Swiss will rally. So we should be seeing some strength coming through on this Swiss franc. Well, obviously that would mean Aussie dollar Swiss down. But at the moment with the Aussie dollar and the interest rate rise, this thing's just not giving up the ghost at the moment. So it's ready to go. It looks like it's ready to go. This is what I was looking at this level yesterday as being a stop run on the 4 hour. That tends to be round about half an ADR. Half an ADR on this is 23. Stop run was 26. So it looked yesterday like it was potentially just going to poke its head out the high and then pull back into this area here. But this morning it's gone off again. That's because the euro's weakened this morning. Obviously, Australian dollar helps itself up to the upside because the Swiss franc is weak. So it's just stuck. There's a lot of these like this at the moment that are just stuck. The pullbacks are happening, but they're so shallow. They're all the pullbacks at the moment you're getting. They're 23s, not 38s. Look, 23. Yeah, that's a normal pullback. This is what we need in position trading, typically to when you're dollar averaging into a move. As long as you get a 38 pullback, which is normally 1 to 1.5 ADR on a move on the 4 hour or the hourly, that's all you need. When you get these 23s, this is why the H4 strategy is in so much trouble at the moment, because every pullback is shallow. They're flags. They're not pullbacks, they're flags. And flag breaks are bullish in this case. So we're just struggling at the minute to get any sort of downside momentum because the market's just not got any movement. It's just not got any strength. When you get something that's strong, it's just not, there's nothing on the other side to push it back. It will happen because, like I said, they'll run out of buyers and sellers. The market will just go, I'm not doing this anymore. They'll stop. And when they stop, there's no other option but to do the opposite. When they do the opposite, it comes down like a house of cards fast. We will see ADR hits to the downside on these Aussies very soon. It's just your job is to survive until they press the button. Aussie New Zealand we know about, extended and embedded. That's just what I was saying about yesterday. You know, if you go back, look at this squeeze. So this is the 24th of May. We're 8th of June now. So this is 11 days, 12 pretty much, after the news up. If you go back in time and try and find instances where you get an embedded 4-hour RSI, just doesn't happen. It's a real rare. There's one there, look. Yeah, there's one there. And look what happened. So that's where we got extended. The embedding finished there. Bang. Straight up, 2 days, solid ADRs. That's the profit take. So building the position, taking the profit. Building the position, take the profit. So it's just something that doesn't happen very often. And this is actually worse than that previous one. So Aussie dollar, New Zealand dollar, we know 4-hour RSI extension was extended again, I think on the hourly, wasn't it? Just about yesterday, yeah. And then we got that reversal on the hourly, and that has held, which is great news. So during the Asian session, there was no buying on Australian dollar, which is fantastic news. It's the first time in the Asian session we've had, actually it's not, we had quiet Asia there, look. But normally Asia is you know, bullish. So it's a good sign. If we can get a break of these lows today, i.e. we can break down below New York, there's a good chance that the market will see that double roll over and then jump on board and start taking profit because they want to see all this money they've got rolling away. Had Swiss ended on the 4-hour, big strong move up on the Canadian dollar. Obviously yesterday we got a weak Swiss franc at the moment. We are up at a monthly high here at the moment, so this is a good area of resistance. Whoops, too far. So this is last month's high. That's the previous month's high. That's a double top. So again, if we push out of this by roughly half an ADR and then it pulls back down again, that's basically just a false breakout. False breakouts happen because there are limit orders sitting at the highs from the banks. And it takes, as you can see, we stopped exactly there because the limit's triggered. So everybody that was buying into this hit a brick wall of orders, basically. They just can't get through. So the market, the buyers are exhausted because they've put all their effort into trying to get through that level and they failed. So they have to take a run up and push through again. And it takes an awful lot of money to push through those sell orders. Those sell orders will puke, stop out in those positions. And then by the time that's happened, they've got no more buying power left. So it pops back down. That's why false breakouts happen. So we need to see if that happens. The alternative, obviously, is we slam through it, retest, and push. It's a breakout. So CAD Swiss extended on the 4 hour. Again, we've got divergence there. So it is bearish. This is divergence is a sign of exactly what I've just said. Divergence means that we've got a move up with low strength, i.e. the movement that actually got through there. It's not normal buying. When you get rallies, you get strength in the market, you get pushes up. When you get pushes up with no strength, it just means that there's just no buying power left and it tends to fall back down again. Especially when you've got something that's moved fast and hard. This has had a really nice big profit take in the middle though, as you can see. So this is what we're talking about, the 23 retracements and the 38 retracements. Yeah, this is a 38. Yeah, that's a pullback. That's a profit take. 23 is a flag break, which is bullish continuation. So we have had a profit take on that one. And this is where the hourly RSI strategy benefits over the 4 hour, because it gets in faster, gets in quicker, gets out quicker. Just easier to trade. But obviously the downside to it is in a squeeze, you're going to be in more positions faster and you get squeezed harder, as we're finding out with the Aussie New Zealand. So that's CAD Swiss. Euro CAD extended to the the downside. Euro coming down obviously today. Canadian dollar's got a bit of strength in it. We'll have a look at all these in a little bit more detail, the CADs, in a minute. But this area obviously is where we've got embedded. So you've had an entry there on the 4 hour. You can see the hourly entry there was already exited. So gone through the support. I think we looked at this one, didn't we, yesterday? The next leg down is, yeah, this low that I drew on. So we got this double bottom, which is ADR today. So if this breaks down to ADR today, that's kind of last chance saloon. Once that level's gone, there's really nothing that you would say is a solid support resistance. That's the level I think is probably the most likely. That's like 4 ADR or 5 ADR or something away. So let's hope we get a bounce there if you're long on this. There's no positions on it at the moment because it's just been nice and grindy. Nothing's got really extended apart from there, which is the thing back we got. So yeah, EuroCAD extended, but again, don't know how the market's going to react to yesterday's news. Euro, we should see bullish. If the Canadian dollar is going to remain bullish on that unexpected rate increase yesterday, this thing could continue to come down, but the euro will power up at some point. We got news next week. So we've got the euro rate on Thursday, 3.75. We will be going up to 4. Unlikely we'll go to 4.25. Might happen, but I doubt it. So we should get some bullish movement off of the euro next week. We thought that on the last one. Didn't get it, did we? So we'll see. New Zealand CAD is also extended on the 4. As you can see, scaling out of this one, 5 positions on now. Another one taken yesterday. The New Zealand dollar is very much the same as this Australian dollar. That was just craziness. You don't put interest rates up and tank a currency normally. That doesn't happen. I don't know what happened with this New Zealand dollar. They must have really overshot it to do this, to react like this. So yeah, not what you would expect to happen, but it's happened. So in it, waiting, scaling out. Aussie New Zealand and New Zealand CAD are the cause of 90% of the drawdown control that's been done this week. Again, exposure twice on the New Zealand dollar. Just getting caught the wrong side of 2 big moves, which just are not expected fundamentally. So but that is starting to turn around. So average on this is not far away, as you can see. So my average is here, the green, which is 125 ADR. So a decent day is going to pull us back up into there. If we can get a pullback on this move, there's a good chance that we'll be able to get out of that. But just waiting for some New Zealand dollar strength. And this Canadian dollar, obviously, we had this big push. We don't know what's going to happen with this Canadian dollar move. So, as I've said, we've seen the euro and the New Zealand dollar have positive rate increases and completely collapse. We've also seen things not have a rate increase and pump. this has had a rate increase that wasn't expected. That's what we would expect to happen, and then that. There's no reason why this couldn't happen, is there? If everything else is doing the opposite to what we normally expect from a fundamental move, why wouldn't the Canadian dollar suddenly weaken because the rate's gone up? Yeah, it's happened with other currencies, isn't it? So we'll see. But at the moment, in that one, looking for, that's a candidate really for aggressive as well. Yeah, I mean, we've had a reverse alert on the hourly on that. I might take an aggressive move on that one as well. I will, what are we, 9, 4.5. It's just not a very good spot. That's the thing. I mean, I think it's a little bit early, really, for trying to get aggressive on this. That is where I would look to test. So those two levels I've just drawn on are previous peaks from way back there that you saw. They're within ADR today. So if we can get down to here and kind of get an ADR hit, that's potentially where we might get a reaction point. They're very, very old levels, but you need a catalyst, a level, really, to do it. So I'm not a great fan of doing aggressive drawdown control, as I covered yesterday in that video. Just for the sake of doing aggressive drawdown control, I like to do it at an area where we've got a reason for the market to stop. However, we've got this propulsion gap to get filled, and an aggressive position here would bring that down very nicely. If we can get an ADR hit today, it makes sense to come and test this level if we're going to continue down. So, yeah, you know, this is what I was saying in that video yesterday. You're never going to have people taking the same aggressive positions in the same places. It's a very subjective thing. It's discretionary, totally discretionary. That looks really good. I'm going to take it. So you can see the average has now dropped down to ADR. So if we get a test on this previous support, which turns resistance for the bounce, there is an opportunity to exit at ADR now, which I didn't have a minute ago. So I'm just going to put a TP there, which is 1%. And then if we get there, if we hit that TP, actually I'm going to put it up at the top of that gap, I can then make a decision what to do. And that decision will be made, as we covered yesterday in that video, it'll be made dependent on what that is doing and what this is like. If this is all back down to 2% because everything's gone crazy in the opposite direction today, I may decide to just take that profit off, do a little bit of drawdown control with it and leave it on. I don't know. I'll decide when it gets there, if it gets there. It's all ifs and buts until it happens. Planning, all you can do is plan, can't you? No idea which way it's going to go. US dollar CAD is the other 4-hour extension. So 4-hour RSI extension to the downside. We got a really nice bounce off of this yesterday. It's pushing down again. So US dollar CAD, as I say, you know, this is what we normally look at on US dollar CAD. It's range bound a lot of the time because they want to keep the market tight between themselves. They're both big oil players as well. And obviously oil is not having a great time at the moment. So that isn't helping either of them at the moment. Although oil is looking like it's going to try again, look, get out of this level. So got this contraction going on at the moment. So we'll see how we get on there. But US dollar CAD, obviously very extended off the back yesterday. We retraced 50% of the news move yesterday. And then we've just been stuck completely sideways. So we'll have a look at all the CAD pairs. Let me just quickly catch up on the chat. DAX, you are not out of your opening range. Oh yeah, you have. You've broken out to the downside. It's trying to rally long at the minute, but bit of a mess this morning, the open, wasn't it? Right, so it is going for the upside. Look. So when we break out of this high, target to the upside today for a trend. If we are going to trend, if we're either going to go into rotation, or if we're going to trend yesterday's high and previous day's high, that's your target to the upside, just within ADR. Lovely 45p on the DAX. Good one, outro. Stop out, break even then, I guess. Do you think Aussie dollar New Zealand will pull back now? All right. No idea. Hopefully. Hasn't gone anywhere for 24 hours. That's a good sign. Put it this way. The buyers seem to have run out of steam at the moment. Whether or not the sellers, i.e. the buyers, are going to turn into sellers now and get out of these positions is going to happen today, we'll find out. The news catalyst today is 1:30. So when that US unemployment claims comes out, we may find we get a big, strong push in one direction or the other on the US dollar. That will take money. They will pull money out of other things. Aussie and New Zealand, probably not the main currencies they would pull it out of. So I don't think we'll get a massive move on these today because of any US dollar movement, but we may well find one of these just goes and they start a move. It's all down to the banks. Yeah, they're all sitting there. They're all sitting there with P&Ls, same as everybody else is, and they're looking at them going, we need to hit targets. They've got targets to hit weekly. They've got targets to hit monthly. They've got targets to hit quarterly. This is a quarter as well, this month. June, January, February, March, April, May, June. Yeah, it's a quarter. 6th, isn't it? It's a case of at some point they will just go dump the Aussie, and they will just start dumping the Aussie position, and they will keep dumping the Aussie position. As soon as they start to dump the Aussie position, the other banks that are in this and the other institutions that are in this will see the Aussie being dumped, and they will go dump the Aussie. Everybody's dumping the Aussie. They will dump the Aussie, and then as soon as the others see that the two of them are dumping the Aussie and it's coming down, their P&L is shrinking, they will dump the Aussie too. And that's why you get the walking up the stairs, falling down the elevator shaft style moves. The profit take is faster and harder because the fear of losing money is in this. The fear of losing money in a step like this is nowhere near as bad as when that happens. When you see that move go in, that's confirmation. Yeah, the head and shoulders pattern, if you like. But it's actually a reversal in market structure. It's this bit we're interested in. What happens before it is irrelevant. That's why you don't see many head and shoulders. It never works like that. But that's what happens. That's why, and that's what we're waiting for, basically. So, did I hear you say you banked on the DAX? Yep. Oh, where's everything gone? 9.18 this morning on the pre-market. 5. Short DAX now, outro. Oh dear, I'm catching up on chat. Minus 65 on the DAX, minus 0.65% on the DAX. I'm out and waiting for New York. You're not going to try and get any money back? Wait for New York. Doesn't matter. You're never going to win every day. You ever done any testing on flags? Yeah, loads. I used to trade flags in stock. When I was trading stocks, flag breaks were my absolute bread and butter. Morning, Monkey Man. In stocks, I used to trade 3 patterns actually. The first one was a initial flag break Yeah, so you wait for a break, you wait for a movement. So I had scanners in place to identify any stocks that had moved X% within the first sort of 15 to 20 minutes of a session, and then play the flag break of them. And that was one of my bread and butters. NVIDIA, I used to do this on NVIDIA and Tesla all the time on 5 minutes on the stock market open. The NVIDIA and Tesla are very similar to all the other indices in the fact that when it breaks, it then either does one of two things. It flags and continues on a trend day, or it goes into a rotation day. Yeah. So that flag break is the start of a trend day. And that's how you make money very easy in the stocks, in anything, and in the indices as well. New Zealand dollar Swiss ADR. Look at this. A massively weak Swiss franc. I'd imagine the euro is doing the same. Big weakness in the euro. That's why that DAX rally is happening. Euro's weakening. So you used to play a lot of flag breaks. And then we used to play what's called a fizzle, which is basically after that move, you'll quite often get a run for a little bit or an accumulation. So it doesn't manage to get anywhere. So it's basically going like that, and that's the move of the day. And then it does this. And what you'll find then is it will fizzle for the day. And the fizzle play is basically where the flag break fails. So if you get a failed flag break, you try a fizzle. So what it is a move, flag, break, fail, accumulation, fizzle. And you short it. And what it does for the rest of the day is just fizzle. Doesn't do anything. But because you've had a rally, it tends to come back and retrace into the rally. Because basically, if you think about what's happening, you've got a break. This is, look at this on the screen. This is exactly it. Imagine this is the open of the New York stock market on the 5-minute chart. I have now got a flag. I am waiting for a break. If I take that break and it hits that high and the sellers step in and we cannot make a new high, i.e. there's no one up here willing to sell to us, we will go like that. Then what we will do is think of a fib, draw it on. We will basically fizzle back down to around about one of those levels. We never know which it is. It's either a 38, a 50, or a 61. A lot of people used to play what's called the VWAP fizzle. So on stocks, you have centralized exchange of volume. So you have what's called a VWAP, which is a volume weighted average price. And what we used to do is, what you see is a VWAP. What will happen is price will fly, VWAP will move up like this. And then as an accumulation forms, VWAP will flatten. So you're playing what's called the VWAP fizzle. So you're trading back to VWAP. VWAP will tend to sit somewhere between 38 to 61 retracement. So yeah, flags are you trading an awful lot. Work really well on small time frames. Large time frames, they don't work as well because you flatten the price out. A flag break is part of a trend, and trends are much better on 5-minute charts because you're getting involved in the day's movement. On higher time frames, it's a lot harder to play them. They don't work as well because you get a lot of false flag breaks like this. This is a perfect example. On a 5-minute chart, you can draw a trend line at the top of the flag, right? And that is basically it. When you get close above there, that's a flag break. On an hourly chart, you'll get lots of wicks like that, and like that, and like that. And you can't draw a line easily. 5-minute charts, you can do it a lot better. So yeah, you can. I've built EAs to model flag breaks, so we have to have a hourly candle, which is basically a propulsion candle. After you get a propulsion candle like that on a 5-minute chart, you look for lower highs, and you need a minimum of 4 lower highs. So you have candles where you have lower highs, 4 of them. And then basically, as soon as you've got 4 lower highs, you monitor for a break of that high. If it makes another lower one, you monitor a break of that high. Makes another one, you monitor a break of that high. When it breaks that high, it's a flag break. Very, very simple. Is it profitable? Not something you can really mechanically do, because where do you put your stop loss? There's always going to be times when it's going to make a massive move, but a flag break is a trend play. There's a lot of other stuff you need to analyze. Where's the nearest resistance? There's so much that goes into it. For manual trading, flags are really good. Automated and backtesting, just anything you do in backtesting, you will always try and curve fit it to something that you're just never going to replicate. Flags never look the same either. So look at the flag break here. That is a flag break. Just doesn't look very pretty, does it? But it's a flag break. That was the break. It's ugly. Yeah. So on an EA, that double top there would not be a lower high. Therefore, that would not be technically a flag break. However, me as a human being visually trying to trade flag breaks would have taken that. Subjective, which is why very rarely when you buy systems and courses that sell you things like this, how to trade flag breaks, they're subjective. I'll look at it and go, that's a beautiful flag. Other people look at it and go, technically it's not. Everybody's got, a different view of the chart. This is why trading is very hard to teach, because everybody will draw a trend line in a different way. Everybody will draw a fib slightly differently. There's multiple ways to do the same thing. At the end of the day, market goes up, market goes down. You decide when to press the button. You can control the risk. That's the only thing that's in your control, risk. Everything else is completely down to the market. Whether you make money or not today is nothing to do with your strategy, your system, your risk, or anything. It's to do with whether the market goes the right direction when you happen to press the button on that one candlestick you decided to choose. Nothing in the world that's going to help you make money apart from the market. Again, Bootcamp, you get on the train either goes that way or that way. Yeah. When you get on and you want to go to that station, down to the train driver as to whether or not he takes the left fork or the right fork. You're on the train. Once you're on the train, you can't get off. It's going where it's going. So when you get to the next station, your decision is, do I get off the train, take a loss, or do I get back on the train and hope that he takes that fork this time? And if he takes that fork this time, I can get out. That's the child's version of training. Baby pips, one step further. That's Duplo pips. One before Lego. Lee, what do you think about NAS this afternoon? No point in trading the NAS this morning. It's New York. If you try and trade the NAS in the Globex session, you will get hurt. The NASDAQ moves in the afternoons. Mumo, if I had ORBV2, I'd try to get my money back. Mumo, you could have traded... What I traded here with ORBV2 is 100% tradable with ORBV1. All you do is you set this time to be 5 minutes before the open. You set this to be the open. You set that to be 5 minutes before the open. You set that to be the open. You set that to 150%. You set that to 500%. You set the trailing stop to 150%. That is exactly what I've just done. Opening range breakout EA version 1 or version 2.7 does that. There's no reason why you couldn't have traded exactly what I've just traded this morning. The only difference is after this initial trade, this version does different stuff. But it doesn't need to today because it's made profit. So it's turned itself off and gone, happy days, walk away. Nothing different. What was my TP1? 150%. Yeah. No. Mumo, no. My TP was not 1.5%. My TP was 150% of the opening range. Yeah. In the opening range breakout, that's where you're going wrong. The opening range breakout. Yeah. TP1 position multiplier, percentage of stop loss 150 and 500 is what I've got set. So 150% of the range. Not 1.5% of my account. Yeah. There's the range. There is 1.5, 1.5R. Obviously, this isn't drawn exact. But The entry was there. Yeah. 1.5 R of the range. Not 1.5% of my account. That there is $750 on a 100K account, which is $1,500. But it's only $750 on each trade. It's taking 2 entries. So $750 on the first, $750 on the second. So if I wanted to, I could close both of those out at $150, which is 1.5% of my account. I'm targeting a 1.5 R, not percent. Big difference. Right. So let me just quickly want to whiz through these Canadians. So we kind of missed it. So we just had an ADR on the New Zealand dollar Swiss. So obviously we know that the euro and the Swiss are very weak today. So there's no chance of getting in that. No chance. So if this pushes further, if we get more Swiss weakness, obviously, and we get a 125 ADR or something, then the reverse alert is going to jump onto this candle here. So if we get up to this area, which is the previous highs, there is an ADR reversal opportunity, but it needs to push further first. You know, you're not going to get in a short there. So that's not really going to be a play, is it? So all these Canadian dollars. Yesterday, obviously, we had the news on the CAD. It was bigger than expected. We were not expecting the overnight rate to jump up to 4.75. We were expecting a 4.5. So they gave us a nice little surprise. So, of course, the market went, oh, that's great. We need to put more money into the Canadian dollar, which they did. And it flew down. Obviously, Aussie CAD flew down because the Canadian dollar flew up. Since then, we did not get a continuation move in New York. So New York basically sat there and went, right, okay. And Asia has not put any more money in. So there is a possibility today of a V-shaped recovery, which is obviously, if you look on the hourly chart, would be something like that, which seems to be underway. So there is a mean reversion opportunity on these at the moment. What we don't know is if they are going to continue to pump the CAD. So one of two things is going to happen. We're going to get the V-shaped recovery and the market is going to go, right, that's brilliant. We will be bullish on the Canadian dollar moving forward, but not, oh my God, we need to pile loads into it because they're already in it. The trouble with the Canadian dollar at the moment is it's being heavily weighed down by oil. So even though they're increasing their interest rates, they're sort of getting on top of inflation, not particularly amazingly, but they are. Doesn't help if oil prices continue to drop because it's going to weaken the Canadian dollar. So I think this is quite possibly going to pull back and then get a little bit stronger, but not fly. So this propulsion gap today is a good target to the upside, ADRs, that sort of thing, across all of these, if you want to play them. So CAD Swiss obviously would be a reversal back down into propulsion. So you're looking to come back down and retest. A lot of the time we test half of a propulsion gap of this size before we bounce out of it. So don't get greedy. Previous day's high in this case on CAD Swiss. Obviously the Swiss franc's really weak, although that's coming down now. So the Swiss franc might be powering back up again. Yeah, a little bit of power coming back into the Swiss franc now. So that little flurry we had was just a big order by the looks of things. So, so CAD Swiss potential play back down to there. So all of these, if you want to play them as shorts, drop down M5. There's your reversal alert. You've just had that trigger. These aren't extended on RSI, so they're not sort of play that I would say, right, let's get in to a position on them. But for a stop loss play, give yourself a decent amount of room above the high in case we do an uneven M pattern move, and you've got a lovely big target. Yeah, so from a risk reward perspective, when you're looking at these, they're very nice risk reward plays. So CAD Yen, That one's already started. So we've got a series of lower highs going in at the moment and lower lows, obviously, as you can see. So again, drop down. Your reversal in Asia was there. Euro CAD, again, this would be the opposite. So reversal, we've had a massive weakness on this euro this morning, obviously. So that's just taken out yesterday's low. All the smart money concept traders are long. Their stops are there. So the market will probably put down there and then take them out because they are smart money traders. That's why they put stops in the market, so that the market can take them out before it goes back the way they wanted. So they're all long. What else we got? CAD. Pound, same thing. You're just about to get the reversal on that one there. Again, we've just taken out that low from Asia, which took out yesterday's low. So we are kind of looking slightly bullish, but it will either go or it won't. And you know, what will happen is you will see it'll be a fast move today. Quite possibly, the bulk of the move will happen at 1:30 when the US dollar unemployment figures are released. So watch it at 1:30. You might they might spike it back up there if it hasn't got there already. New Zealand dollar CAD is already on its way. That's that aggressive drawdown control position that I've got on, which is working nicely at the moment. And we've got US dollar CAD. Now, this is the one that you're going to find. Oh, it's already done it. There you go. So US dollar CAD, obviously, this is what I mean by, you know, this is why it's so important to understand the relationship between currencies. US dollar CAD undid itself yesterday. So the Canadian dollar move was undone automatically yesterday, because when the Canadian dollar rallies, the US dollar rallies with it. So although you get that initial push, when there's further strength coming through in the Canadian dollar, it also comes through in the US dollar. The US dollar had more strength yesterday because there was more buying in that, as well as the CAD, and it managed to undo everything. So this one isn't really a valid long today because it's already undone itself. So there's propulsion gap you were looking at on the hourly isn't there. So there's the news. Yeah. Propulsion gap is already filled. Whereas when you look at all the other pairs against the Canadian dollar, you have the propulsion gap target. So their plays today, their options, as you can see, the market's certainly rejecting going lower at the moment. Doesn't mean it's going to go higher. It is rejecting going lower. So potential plays back up on those if you want them. No idea what they're going to do with the Canadian dollar moving forward, though. So we just need to be aware that it might rally, might continue to rally. But they'll wait for the unemployment figures before they do anything. So, Lee, don't forget ORB V2 take multiple trades at same level. Oh yeah, so yeah, Mumo, which I think you've probably got on, but if you're using ORB V1 to take multiple trades, obviously, you'll have, that's the Dow. Doesn't matter. But the Dow, yeah, if you're setting it to do the same thing on two entries, yeah, so I want range 1 and range 2 to be the same, you have to take multiple trades if at same level to true, because what it's going to do is it's going to place, say that's the opening range, it's going to place two entries at the same time at the same level. Yeah. So obviously that needs to be set to true. Otherwise it will place one and then it will go, I've already got one there. I'm not going to go twice. Yeah, so just make sure you have that set to true if you're using ORB V1. Confusing, isn't it? ORB version 1 is actually ORB version 2.7, which is why I've called the new version ORB Continuous V2. Development name. I should give everything those sneaky development names that companies use. Like there's a product called Photon. It's actually a dishwashing tablet or something, but they don't want to let everybody know they're developing a new dishwasher tablet. Just making stuff up. Wow, nearly 90 views. Ooh, busy today. Good. Let's see if we can get to 100. Hit the thumbs up button, everybody. I haven't done that for ages, have I? I went in. like about 2 months ago or 3 months ago, I'll tell you what it was. It's when I was on those tablets, when I had my vertebrae problem and I was on all those drugs. I turned into a YouTuber, didn't I? I was like, hey, everybody, give me the thumbs up. And we got up to 150 people in it at one point because I was being all YouTubey. And then everyone went, oh, he's boring because he just talks about real world of trading. I'm not interested in that. I need a Lamborghini. They all went off somewhere else and joined the Lamborghini crowd. Maybe they're coming back because they've realized the Lamborghini crowd are actually selling them a full stream. I don't know. You can get off, but it could hurt. Yeah, exactly. The other ones, you're talking about the train. Yeah. Yeah, you get on the train. If it goes that way, you could get off whenever you like. But if you jump off while it's moving, it's going to hurt, which is why we wait for it to stop. And then we decide, do we want to get back on? So if you've gone long there, it's done that, the train stopped. All right, what do you want to do? Do you want to get on again? That's what the reverse alert is. The reverse alert tells you that actually there's a chance the train might be going back our way. Okay, I'll take another one. Position trading. Very easy, isn't it? Very easy to talking child speak about trading. Right, so there's something someone has asked about, which is again related to this Aussie New Zealand, which is beautifully coming down. We've just taken the low of New York. So we'll see if the market sees this and goes, hey guys, this could be it. We'll get a big candle. As soon as we get that big candle, we'll put in a propulsion gap after the next candle. And if the next candle does not trade back up into that wick, the market will be going, we've got a gap. We've got a sell void. We are not going to get back up there, guys. Exit. Pop. Cha-ching. So yeah, related to this, a couple of people asked me in Telegram about squeezes specifically, because obviously there's a few people getting squeezed on a few things at the moment. So there's 3 types of squeeze, which I just wanted to cover. Or 3 scenarios that happen in a position trade, what I should say. So whenever you take a trade, a position trade with any of the position trading strategies, there's one of 3 things is going to happen to you. So when I say I'm looking at my P&L, yeah, and I'm not interested in anything that is not a problem on the P&L. So the reason I'm looking at the P&L and the drawdown control column specifically every day is I'm not interested in anything that's going to fall into stage 1 of position trading. And stage or phase 1 or version 1 of position trading, if you like, is the market moves, it gives us a signal, which is either an RSI extension, an ADR reversal, or whatever it may be. It gives us a signal to get in. We get in and it either does one or 2 things now. It either goes down and it takes profit, or it does that, it moves up, it gets us into a second position, and then it comes down and gets out with a profit, or it moves up and gets us into a third position, then it moves down and it gets a profit. Yeah. So anything that is taking between 1 to 3 trades, I'm not interested. I don't care. All that is number 1. That's the first thing that can happen in position trading, which is it just goes into drawdown as usual, and then it turns into profit and becomes realized profit. We bank it and we don't worry about it. That's it. So that's the first thing that happens when you take a position trade. That is a possibility. It's an CAD Swiss RSI alert. So that's the first thing that happens, which is what happens probably 70% of the time. We might have to take 1 drawdown control on it. Let me just find one. One. Aussie dollar Swiss down here, look. Yeah, so we get in on the RSI extension, it drops down, we take a second entry, we do 1 drawdown control, it pops up, done. Didn't even look at it. No idea I was in it. Because I scanned that column, that thing would have never have got into 1% of drawdown, so I wouldn't have even looked at it. Aussie Swiss, it just basically, it takes a trade automatically, it puts it in the bank, and that's it. That's what it does. So that's the first thing that happens. Second thing that happens is we get something which squeezes us a little bit for a week or 2. So you get into a position, it pushes down. You get into another position, it pushes up a little bit, pushes down. You get into another position, accumulates, drops down. So now you're in 4 positions. And now you've got 2 drawdown controls maybe happened on it, possibly 3. you're sitting in somewhere between 1 to 2.5% of drawdown. So this is where I'm kind of monitoring. Yeah. These trades where you're getting a stronger push. Yeah. No, that's a squeeze. I was just trying to think of pound New Zealand. That's 3. Kind of like the pound New Zealand. Up here, this is normally, let's say we had another one here. Yeah. At this point, you're thinking, right, I'm a week or so into this now. It's not doing particularly well. These are the ones where I'll be monitoring them and going, I'm in 1-2% of drawdown. We're reaching a decent level. Let's see if that reacts. If it doesn't react, obviously, then we might need to start doing a little bit more aggressive drawdown control on it. So I'll be looking at 4 to 6 positions thinking we need to get involved. So that's the second thing. And what happens is it's just a slightly larger move than normal, and then the profit take happens. Yeah. Climbing up the stairs, falling down the elevator shaft. 2 days, undone, out. Perfect. So stage 1 is a normal trade. Normal trades are 1 entry, 2 entry, 3 entry, out, usually lasting 2 to 3 days. Second stage of position trading is 4 positions, 5, 6 positions, possibly 6 is getting a little bit tight, but 4 or 5 positions, which is just a little bit of a stronger move than normal. Slight squeeze, short squeeze, long squeeze, and then the profit take move. So these are normal trades as far as I'm concerned. I don't get involved in them. Those are the ones I'm looking at my P&L and going, whatever. New Zealand, Aussie New Zealand, or pound New Zealand. Let's look. Oh, sorry, pound CAD. So this is another example of a squeeze, right? But this was a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12-day squeeze. Where are we on Aussie New Zealand at the moment? Day 12. Same as this. This is a squeeze. This is the third thing that can happen to you. So when you get into a squeeze like this, it's basically the market has had a reason to turn aggressively and not take profit, because what it's seen is an opportunity to make money. Others have seen an opportunity to make money, and everybody has decided to get onto that train and drive it. There's nothing you can do about it. Okay, so your choices are drawdown control as you go. Yeah, which as you can see here, so we've got 1 position, 2 position, 3 position, 4 position, 5 position, all taken with the EA, all doing drawdown control, right? Sorry, no, there was 5 positions taken with the EA. That was me, aggressive drawdown control. I got in aggressive drawdown control. The market then collapsed, climbing up the stairs, falling down the elevator shaft. What I was anticipating was a second day of 50% retracement. I didn't get it. We got a second push. So on these scenarios, this is when you're going to do drawdown control. And the reason this person asked me about it was because obviously the video I released yesterday about aggressive drawdown control, that one. How do we know when we need to do aggressive drawdown control was the position? So was the question. So, you know, the answer is always going to be, you're never going to know when you need to do it. It's when you're uncomfortable. But anything that is 3 or 4 positions, to me, is totally normal. Yeah, I am a position trader. I am taking a position on a currency. I don't know when the banks are going to profit take. What I do know is that they will profit take at some point, 70 to 80% of the time. And that is it. I don't even touch them. I don't worry about them. They just happen. It's market movement. It's market structure. As long as that exists, a normal position trade will never get into more than 3 or 4 positions before it's made a profit. Ideally, obviously, we want to get in, one out, one in, one out. That's not real world. So these, when we get to 5, I'm normally in somewhere between 2 to 3% of drawdown. This is when I start personally to go, right, let's look for a level, or let's look for a really good signal, i.e. something like this. And this is where your experience will come in, and where your knowledge of trading patterns, candlesticks will come in. Is that bullish or bearish? Yeah. Push, rejection. push, rejection, push, rejection, push, rejection. Do you think that's going to go long or short? I see things like this. That first push up, look, where I got in, there. Yeah. We hit a high. We went a day where we couldn't move anywhere. Ring any bells? Aussie New Zealand. Yeah, we had a final push. We hit a level. We rejected it. The sellers at this point went, no, you're not going anywhere. We've had enough, right? Stop. And then they went, no, we're going to go. And they went, no, you're not. Stop. And they went, right, finally, we're going to have a go. And they pushed through it. And the sellers just went, screw you. You are not coming through. It's like Lord of the Rings. You shall not pass. Sellers went, we're taking control. I got in as soon as I saw that rejection, or the rejection potentially happening. I would have had a tight stop in, out on aggressive drawdown control. So as soon as I got that aggressive drawdown control off, I took off a position from down there and I took off another position from down there. And then when that one hit there, I took off another one. Yeah, so I'm basically using all that profit to get out. But that's not really the point of this section. Is not to talk about aggressive drawdown control. I spent a half hour doing a video on that yesterday. It's basically, how do I know when to do drawdown control? That was the bit of that was missing. And the bit is, like I said in the video, 3% is me. When you think this thing's really been flying, I haven't seen it do this for a long time, or I've never seen it do this, or I've looked back on my chart and I can't find a time when it's done this before. That's when you do it, because the likelihood of it actually now putting that move in is high. Because if you haven't seen it do that before, if you've scanned through on an hourly chart and you've gone out and you've gone back and you've gone, I haven't seen a move like this on this chart ever. And then you've gone, haven't seen it on that one, haven't seen it on that one. So this is really out of the ordinary. It's highly unlikely it's going to sustain this move, isn't it? Because if it hasn't done it before, and this is the first time it's ever had a go at it, it's highly unlikely it's going to continue. We got above the 80 RSI. Well, we don't ever get above the 80 RSI on the pound yen. Short it then. Highly unlikely it's going to go like that, is it? It's never got here before. And this is the first attempt it's ever had of it. It's going to run out at some point. They can't sustain it. So you just have to use your head, I think, is the answer. But I wanted to, explain, when you get into a position, you have to get comfortable with being in drawdown, because you are going to be in drawdown all the time. The whole purpose of position trading is that we don't know when the market is going to turn. We haven't got a clue. No one has. No one's got a crystal ball. So when we press that button, there's a high probability that isn't going to work. So you're going to go into drawdown. Accept it. You're going to have another stab at it. It's not going to work. And you're going to have another stab at it. And that's not going to work. Eventually, you're going to get to the point where you've stabbed at it 3 or 4 times and it's now pushing further. And you're like, right, this is not working for some reason. Fundamentals, earthquake, war, just the fact that Barclays went, let's just squeeze the crap out of everybody for fun on Aussie New Zealand for 3 weeks. Doesn't matter what the reason is. What matters is how you handle it. So you've got to identify that you're in a squeeze, first thing. So if you're in 3 or 4 positions, it's a trade. If you're in 1 or 2 positions, it's a trade. If you're in 5 positions, you need to start monitoring it. And this is why I say watch your trade manager dash. This will tell you when things are going a little bit awry. Either you're watching that number. Hang on a minute, I've got 6 trades on. We don't normally get to 6. Normally everything's sitting in 2s and 3s and then it's just going into my P&L. Or you're watching this. And the difference between that number and that number is quite important. You can get into a squeeze into 5% of drawdown with 2 trades on. Yeah. If the market goes 300% of ADR, you take your first entry. You take your first entry. Market immediately goes 300% of ADR, accumulates, and then pushes an ADR the next day. That's the next reversal alert. You're in 2 trades. That trade there might be in 2% of drawdown because you haven't had an opportunity to take a second trade, which is why I don't pay attention to the number of trades. I pay attention to how far has this thing gone? What is my drawdown? Because this is what hurts me financially. I could have 1 trade on or 20 trades on and sit in 1%. that doesn't affect my finances. That affects my finances. So that's why that's the concentration. That's what you're looking at. And if you get a big parabolic move followed by a big parabolic move followed by a big parabolic move, you might only have 3 trades on, yeah, which I just said is totally normal. It's totally normal if it's not sitting in 6%. It could be sitting in 6% if every single one of these parabolic moves is 3 ADR. I mean, I have never seen it happen, but in theory, it could happen, obviously, and you could be sitting in 3 trades at 6%. Focus on that. Worry about what is worryable here. There's nothing worrying me at the moment apart from Aussie New Zealand. New Zealand dollar CAD was in 3% this morning. It's now in 1.5%. Why? Because I took an aggressive drawdown control position. If that thing pushes today, I'll be out flat. It'll be over there. That thing that I've been worrying about, or I haven't been worrying about it, but I've had 5 trades on it. I've just undone the worry with 1 trade because I identified there's a problem. Deal with it. But that thing, didn't even know I was in it. Didn't even know I was in the pound odd. Why would I? Why would I even look at them? What's the point in looking at them? Because then they're just trades. They're just trade. It's just positions. I am only interested in stuff where the market structure breaks, and we don't get market structure anymore. We get nuts for no reason. Yeah. And this is the downside, and this is the pain of position trading compared to the death by 1,000 cuts, getting stopped out 10 times in a row, losing 10% of your account in one go. I've lost 9% of this account, or the EA's traded out of 9% of this account in 2 days. How is that any different to losing 10 trades in a row? Every strategy has a failure point. Every strategy will lose X number of trades in a row. Every strategy of position trading will get squeezed at some point. This will happen once or twice a year, where you'll get a squeeze, which is just nuts, and you will stop and you will get out. If this thing goes up to 7 or 8%, just go, no, I've lost this month. You can't win every month. You can't win every single month. However, as we can see with the Aussie New Zealand, these guys also can't do this forever. They have to stop doing this because they will not have enough in their pot to buy any more of this stuff. There will not be enough people wanting to sell the New Zealand dollar because they've all sold the crap out of it. The guys that have been pushing this up have been buying New Zealand dollar from all of these people. When people have gone, I had 20 million New Zealand dollar last week, I haven't got it anymore. They can't sell it, can they? So the only option left is for the people that bought all the New Zealand dollar to sell it to anybody who wants to buy the New Zealand dollar now. That's why that happens. Yeah. So it's, but you can't predict that. You can't tell when that's going to happen. This is as I said yesterday, this is possibly one of the nastiest squeezes I've seen, just because of the speed and velocity of the sustained velocity of the movement. The speed of it isn't particularly quick. It's taken, over 2 weeks to do it, but it's just not stopped at all, which tells you that they are loaded to the gills. Absolutely loaded to the gills. Yeah, loaded to the gills. Get out. That's what we got coming. And again, if ever you get into squeezes, go back and look at history and try and find something similar in the past. Look at it. What happened last time? So you're preparing yourself for it. If you go back in time and you're looking for a move which is 6 ADR. This is 6.1 ADR, right? Go back in time and try and find a 6.1 ADR move that's parabolic, right? And then see what happened after that. Can you find one that went 8 ADR parabolic? Can you find one that went 10 ADR parabolic? If you can't, you know that this is the worst case scenario that Aussie dollar New Zealand has been in since you've got charting time for, and it's probably going to finish. Get aggressive. Yeah. I've taken 4 failed aggressive drawdown controls on this, and that is why that loss is there. If I hadn't have attempted aggressive drawdown control positions, this would be sitting in something like 8% of drawdown, and well, it wouldn't be now, but and this would be a lot less. So I've caused this loss, me manually intervening. If I'd let the EA just run this, it wouldn't have taken anywhere near that much loss, but it would be in a lot more drawdown. Yeah. So this is the payoff for not being in too much pain here right now. But when this thing comes down like that, if you've closed it and gone, screw it, I'm getting out, that's when it does it. It always is, because everybody's feeling the same as you are. They give up. And then as soon as they start giving up, everybody gives up and it comes down. So you've got to sit through, you've got to live through these multiple times before you understand that they will undo. But you can tell, you can show yourself this in the past. You can look in the past and go, oh yeah, this happened before. Look, I got into 7 positions on it, and then we had a 50% retracement, 38 retracement, yeah, 23 flag break. That's different, but so look at Aussie New Zealand. Look, and you know, visualize the positive. Where's it going? Here, 50%. Somewhere there or there is 38 to 50%. That's a typical profit take on a parabolic squeeze. Visualize that coming down here. This position I've got on here, this aggressive drawdown control. If I had the balls to hold it to where I think it's probably going to come, I would be banking 11.7% on that one position alone. That undoes all of that aggressive drawdown, all that drawdown control I've lost over the last 2 days. I'm not going to do that because I'm not holding for that long. It could get there. If it doesn't get there, I'm not going to take the risk. It probably will get to 38 as a worst case scenario. That's 8.7%. So I could leave that in place there. What I would rather do is go out, walk away, in case we get a flag break, which is, again, we talked about flags this morning, 23% retracement. If this is going parabolic because the Australians have just increased their interest rates unexpectedly, the New Zealanders increased their interest rates expectedly and the market didn't like it. If the case is now Aussie New Zealand is a long, why won't it flag break and run? If it's going to do that, do you want to run the risk of it coming down to here and you getting out with an absolute fortune? Or would you rather make sure you're not in this when the flag break happens? Your choice. Yeah. But these are not choices that you can say, this is what you do. You do what you do based on what you think is going to happen. I don't know what's going to happen. There's no point asking me. I haven't got a clue. I wish I knew. Yeah, but I know worst case scenario is we're going to get a 23% retracement flag break. When it goes, I don't know if this is even when we're going. You know, it looks like it's rolling over. There's a beautiful M pattern formation. We've had a market reversal alert. Yeah, it looks like it's coming down, doesn't it? I haven't got a clue. But if it is, that is my projected. There's absolutely no reason why we shouldn't feel that propulsion, test this previous resistance, and get that 23% flag break if it's going to continue to run long. So I will be out here and I will cut that loss and go, got squeezed this month, nothing I can do about it. Because I've identified this is wrong. Obviously, we know it's wrong. It's not, you know, it doesn't take a rocket scientist to know that you shouldn't have shorted it there. But if I'd have known I shouldn't have shorted it there, I wouldn't have shorted it there because I'm either psychic, have a crystal ball, or a time machine. And I don't possess either. So I got in short. Same way as I got into Aussie dollar and New Zealand dollar long as soon as the thing collapsed last year. Didn't know I was going to do that. Haven't got it. There you go. So hopefully that's helpful. Hopefully the person that asked me was in here. I've archived it, so I don't know who it was. There you go. Name the new ORB, the Lambo ORB. Lots of sales. I know, I'm not going to do that. The Lambo, opening range Lambo break. How many ORBs do you think you'd have to do off a 100k account to afford a Lambo? If it was my money, if I had my own 100k account that I could trade willy-nilly, looking at the back, say willy-nilly, again, if you're not from England, you haven't a clue what I'm talking about. I don't even know what willy-nilly means. But if I was trading my own account with the ORB strategy, you know, these 13% drawdowns, yeah, anything from 13 to 15% drawdown is generating between 100 to 50k profit. I can generate way more than that. This is risking 0.5%. So if you increased your risk per trade from 0.5% up to 1%, obviously you're going to double your drawdown, but you're going to double your profit. Imagine if you went up to 2%, you're going to quadruple your drawdown. So your drawdown is going to go up to somewhere in the region of 50% of your account. You're going to be generating 400k. And this is this system parameter permutation test of 300 produces 300 profitable results. Every single one of these makes a profit, regardless of which of these 300 settings you choose. They all make profit. If only we had our own prop firm. How do you manage your psychology when you're in drawdown in the month and down in floating trades? It's not a lot you can do, is there? I have losing months. You just got to accept it. Yeah. The problem with trading and the problem with everything in this industry, this job, is everybody's focused on winning. When you stop focusing on winning, you focus on making money as a job. Your psychology changes from wanting to win all the time to accepting what the market will give you. Yeah. Warren Buffett doesn't sit there and go, the S&P's only given me 8% this year, right? He only makes 8 to 10% a year, right? 1% a month. When you're a multi-billionaire, 1% a month is more money than you'll ever spend. So it's all to do with the volume of money you have as to what you can make. This is the thing that people don't understand. They see people making loads of money. What they don't realize is they've got £1 million to start with. So making $1,000 a day with $1 million a day, I could do that with my eyes closed. I haven't got $1 million. I can't. When you've got a smaller amount of money, you have to take much more risk to get it. That plays on your psychology. So the problem with trading is everybody is trying to win because that's how you make money. What they don't realize is that isn't how you make money long term. That's how you make money short term. Long term, you accept what the market is going to give you. When the Aussie dollar New Zealand pushes above the high today and stops me out again, I will be making a decision as to whether to scrap it and take another 5% loss on my account. Is it better to continue trading next month and take a 15% loss? Or is it better to hope this comes down and go out of business next month? There's no psychology in it. It's a business. Costs, profits. 18% I made personal last month. If I lose 5% at the moment right now, and I have to take another 5% today, I only made 8% last month. Made 8% net over this period. Over the period of a year, that's what you need to look at. If you can generate 10% a month, you're going to make 120% return a year. If you've got £100,000 or $100,000 to trade with, you are now making 6 figures. But you're not winning every day, you're not winning every week, and you're not winning every month. What you're doing is you're turning that money into a bigger amount. There is no psychology. It's just at some point you've got to turn it off and go, this is not working. And the way that I do it is I scale out. So you can see the EA is scaling out. I won't, if this does push further today, the likelihood is it'll be a final push. And what I will do is go, I'm closing that, I'm closing 50% of that, and I'm closing 50% of that. Yeah, and I'll be left with some smaller positions down here and medium positions there. That will have completely gone. That will have obviously stopped out with 1.5%. This will still be sitting at something like 2%, but it will be something like a 5% loss down there. Yeah. That is the point where this thing tomorrow and Monday will go vroom, vroom. and we'll be sitting at 50%, which is what I've just spoken about, where I think it's probably going to go. But you have to go, I'm not willing to sit through this anymore. And this is the definition of a short squeeze. This is what the banks are doing. They are squeezing. When you hear there's a film called The Short Squeeze, isn't there? Or The Big Squeeze. The squeeze is basically a continuous movement where the banks are just eating up every single order placed in the market and everybody that's taking these positions, right? So think about it. The person that wins, right, in a bank is the person that holds on the longest. If you've got 25 million there and you've got 25 million there, yeah, if you can only execute 25 million long and 25 million short, right, at some point, one of you is going to run out of money first. The person that runs out of money first is the loser. Because this person can go further, right? This person stops. This 25 million now becomes this person's money and it goes the other way. That's what a squeeze is. At some point, there won't be anybody left to play and it will drop. I am being squeezed. When I close this lot out, invariably it's when it happens because I'm doing what everyone else is doing. I'm scaling into a position that's being squeezed. At some point, you have to go and pull the plug. It always is. But you can't go, oh, if that happens all the time, then why don't you stay in it? Because at the end of the day, I need my money and I can't let it all go because I can't trade tomorrow if it's all gone, can I? So you have to pull the plug at some point. This is the first squeeze a lot of people have been through, I think, Aussie New Zealand. So, this is why a lot of people are. When do you start doing drawdown control? How do you do it? And this is why people have been asking it. Someone asked yesterday, wasn't it? I think it was Steve in the live room. So I thought I'd do a session on it because it is massively important. And again, lessons in exposure. If you've got one Aussie short on, you're in a squeeze, the big short. Yeah, that's it. If you've got two Aussie shorts on, you're in a double squeeze. If you've got 7 Aussie shorts on, if you're still in the game, you're in hell. This is why the exposure rule exists. That's the maximum pain I'm willing to take. Not willing to take that. If you do that, you're going to bank a load of money when it's working. When it's not working, you're going to give all of it back and your original balance, and you're going to have to go and find some more money to start a business again tomorrow. It's pain. That's what they're doing. They're causing people pain. And this is why they call it puking, yeah? If you go and trade on the floors in the stock exchange, you'll hear the term all the time. And when you do courses, if you do courses in futures, a lot of the people that teach futures courses are previous pit traders, like Hogue, who works for FTMO. He's a pit trader. He's a previous pit trader. What's his name? Someone in the black. I can't remember what his name is, but there's a few pit traders that teach futures courses and things, and you'll hear them use the terminology puking all the time. And it's from the stock, the original, from the pits. Traders would lose so much money they would be physically sick because they had been squeezed to a point where they suddenly go, I can't take this anymore. They would lose so much money. People jumped out of buildings in New York in the crashes and stuff, didn't they? But puking basically is, I'm going short, I'm going short, I'm going short, I'm going short, I'm going short. I can't do it anymore. They puke their order. They go long, they exit everything. As soon as they do that, he does that. They were right. They knew it was coming. They just couldn't hold it, so they puke. Yeah, this is what they're waiting for. The banks are waiting for you to puke. And this is what smart money concept traders call a stop run. Short it, stop, stopped out, puked. Short it again, stop, stopped out, puked. Yeah, every time you puke, you're taking a loss. If you puke enough, you die. And this is turning into a really, really weird session. But that's basically what it is. Eventually, people will stop doing that. What happens is the market doesn't go up anymore because there's no one willing to do this anymore because they've puked their guts up. They stop it. They will wait now for the market to drop, invariably hoping for a flag to flip. And as soon as they flip, the market goes, nope, we're going the other way. and they start puking in the opposite direction, which is why we have retail sentiment. Aussie New Zealand, 98% of retail are puking their guts up. Aussie yen, 89%, are getting run over by a steamroller. They're on the train in the wrong way, and all they keep doing is buying a ticket, hoping that the train's going to turn around. They don't realise it's going from Land's End to John O'Groats, and it ain't going to turn around for days. And when they finally get off that train and they see it go back the other way, they'll be like, oh. And then they will all flip long, and the train will calm down the opposite direction. The banks are just doing the motions of making an absolute killing, but they can't do it for long because somebody will stop selling to them. You know, us, we haven't got enough money. We make up 5% of the market. We haven't got enough money for the banks to worry about. There are institutions run over. But like I said, institutions can survive this because they've got millions and millions and millions, and they can add to it. They will have a risk profile. They will be doing the same thing. They will be gradually scaling out of this, keeping an average price, waiting for a movement back. As soon as the banks that have been buying go, we can't do it anymore, they will put their foot on the gas and go pop. And all these guys will go pop with them, and that's when that happens. The timing of it, no one on the planet knows. There are people on the planet that know. They're sitting in the banks right now going, today, tomorrow, should we wait for the US dollar unemployment figures, or should we wait for the CAD unemployment rate tomorrow? Yeah, this is why the market moves on news, and why you get things like the Aussie dollar CAD yesterday. Yeah, they wait for the news to happen because that's when there's a high volume of orders available in the market for them to execute those trades, get that profit take done. Yeah. However, this one obviously was partly also fundamental in the fact that they were like, oh, we should have put more money into the CAD. We'll do that at the same time. That's why you get a massive move. Although this wasn't that massive if you look at it, was it? We got 97 off of a 66, so it's 150 ADR. So it wasn't actually that big for a unexpected positive interest rate rise. 150 ADR is pretty much business as usual, isn't it? We would have normally you would expect a much bigger move, which is why I say I don't know that this is going to hold, because look at the things like the US dollar Swiss. When the Swiss decided to increase their interest rates without telling anybody, yeah, that was 500 off of a 60 ADR. Yeah, that's 10x move. What do you mean you're increasing your interest rates? You didn't tell us that. Clap, 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 clap. That's not what we saw yesterday. So it was an unexpected interest rate rise, but there's not a lot. You know, you look at the Canadian dollar, there's not much further they can go. When you start getting up to the fives, it's like putting the brakes on that train. It's hard to go further, because you are going to start making people lose their jobs. You are going to start increasing mortgages to the rate where people default and they lose their houses. As soon as they lose their houses, you have to prop them up with socials. As soon as you prop them up with socials, you have to spend more money. You go further into debt, your GDP drops. Everything is a spiral, and it's all controlled by these four elements. And we're getting to the terminal rates here where they just will struggle to go further. So when you get an unexpected rate rise, which is close to where they thought they were going to stop, do you really still want to buy it? Probably coming down. And also the other thing with these guys is obviously the GDP potentially with the oil dropping is going to make them struggle as well. So we'll see. You are making me spit out my coffee a lot this morning. I know, it's good fun. Did you puke? Sorry, I know it's probably people sitting there having breakfast going, stop talking about puking. It's like when you're watching, like in the news is always on at 6 o'clock at night. You sit down for your dinner, they start talking about people having surgery, bombs dropping, dead bodies lying around. You're like, really? You have to do this while I'm eating my dinner? You notice that doesn't happen at breakfast time. I thought I'd just ruin your breakfast for you. Anyway, DAX has gone ORB to the upside. So there's your 15-minute pre. Obviously, you had the break failure. The ORB version 1 would have taken a second entry on that, and you would be in that one now. Very nice. The 5-minute ORB is there. So we had a short, stop out, flip long, in profit, but it's a 1-to-1. So this is why I'm really, really liking this pre-market. It's just, you're done in 5 minutes. It's so nice to be done for the day in 5 minutes, which is beautiful. Or you're in pain for the next 3 hours, either or. But I'm finding 70% of the time you're done for the day in the morning, which is lovely. We'll see what happens with these three guys this afternoon, 220. Anybody got any other pairs they want to look at? Your tracking profit factor on the ORB. In the backtesting, should I close the spreadsheet? Yeah, so in the backtesting, I use return on drawdown, which is a calculation of profit divided by drawdown amount. So it's profit amount divided by drawdown amount is your return on drawdown. So you would have drawn down 20% of your account to return 100, which means that is a 5 times more profit than the drawdown. That's what I cover. That's what I use as my success gauge of a strategy, if you like. So when I'm scrolling down like this, if I've got something like 200 or 300 passes on a permutation test, if I'm scrolling down and I'm still seeing 2s down here, I'm like, I'm doubling my money, and it doesn't matter what setting I use, I'm doubling my money still. It's good. Obviously, the higher this figure, if you have like 5s and 4s, and then suddenly it jumps down to 2.5s, and then it jumps down to 1.5s within that amount of space, it means these are outliers in the bell curve. And the vast majority of your profit is being made on a very small amount of settings, which means it's not very robust. This is robust. And this is an old test. I haven't retested since I've recoded. So I've got the recoding done. Assuming everything works this afternoon, and what I'm hoping for horribly today is a stop out on something. I'd like all of them to stop out. I'd like all of them to whipsaw this afternoon. It'd be beautiful. Not for anybody that's actually trading it, but for me to test it, I can then test all the inside bar breaks work perfectly. They will do now, because I left a line of coding which deleted orders. As soon as I saw that happen, I was like, I know what I've done. But yesterday, this closed out the trades, whereas it shouldn't have. So, and I've put logging in now so I can tell exactly what's happening. But as long as these work this afternoon, I will go back into the backtester for a few days and run multiple system parameter permutation tests on it, and verify what is and isn't affecting profit factor, whether it be the trailers, whether it be the targets, whether it be distance, offsets. I'll test all the stuff I know affects profitability, and come up with some sets to test. And I need to test across everything. So at the moment, I'm just doing solid DAX testing. The reason I use the DAX is because the DAX doesn't change when we have the clocks change, because the clocks change in Europe at the same time as us in the UK. This chart time doesn't change on the DAX. It's always 10 a.m. always. Whereas on these three, we have 2 times a year where we jump out of sync for an hour. So it moves forward. So your back testing on these, you will have a 2-week period, either 2 or 3 weeks. I can't remember if it's 2 or 3 weeks, where you will be out of sync. And obviously you'll get a period where you're trying to take an opening range breakout an hour before the market actually opens. It won't work. Well, it might work, I don't know. But these are less conclusive. I could split it down and obviously I'd have to find out exactly what date the clocks changed and stuff, and just that period, just get rid of it, which means running multiple tests. I can do it on the DAX. So if I can take the set file from the DAX, put it on these 3 pairs and get a result within 70% of the parameters I achieve on the DAX, I know that it's robust across all indexes, because I'm giving myself a 30% variance of it going wrong for 3 weeks, which is more than I should give it. If it produces 50% of the results it does on the DAX, robust, because the settings are not curve fit to those instruments. It's never, if you can test something on here, get it working, do a robustness test, which gives you 300 variations of settings, which all work over a period of time. Take those robustness settings, replicate them on the DAX on a different period of time it's never seen before, produce a result which is a minimum of 50% of what you achieved on that year that you tested and optimized, and then take that and replicate it on these three for 50 to 70% of what you got on the DAX on that initial test. You can't break it. It's robust, because you've said, test me, optimize me, test me over a different period of time, achieve a similar result. So it's not a fluke. It worked again. Now test it on 3 different instruments you've never seen before, with time differences, which mean that the strategy should fail. And if you can produce a profit, it's as robust as you can get. And that's exactly what I did with the ORB. It's going to have bad days. It's going to have bad weeks. It's going to have bad stagnation periods. Everything does. Because the market at some points, in summer months especially, is going to not have the volatilities. It's going to go sideways and it's going to have horrible days. But again, if I can get that out into Quant Analyzer and I can see what periods are poor, if I can identify summer months don't work with the ORB, we know what not to do, don't we? But if it holds up over summer and occasionally has a pop where it actually makes money, that's fine. If it loses over summer months, stop for 3 months. Can't trade it. I'm finding less of that. Last summer was not anywhere near as bad as previous summers, and I think there's a lot more algo trading now. So I think the market is still busy over the summer when the brokers aren't in. So, Michael, do I trade gold? No. I know a man that does. Just a week. The reason I don't trade gold is it doesn't suit position trading because of things like that and that. It just goes nuts. And obviously it's just a US dollar cross. So all you're doing is you're trading another US dollar, so US cross. So if you're trading pound US dollar, euro US dollar CAD, Aussie US dollar, New Zealand dollar, US dollar Swiss, all you're doing is you're trading gold US dollar. So it's just another cross with US dollar. US dollar goes up, gold goes down. It goes down, goes up. However, it does move on its own as well occasionally when there's a strong purchase, bulk purchase, which we don't see as much of now. So, but gold at the moment is just sideways. So we haven't had we had a signal long there. We haven't had a signal on gold for ages. I haven't, in the way that I trade. One back there. But it's just sideways. 2 weeks now. Bottom of range, I'd be looking to buy it. Still don't know what's going on with the US dollar. I have no clue. The Fed doesn't know what's going on with the US dollar, so how the hell do they expect us to know? It's just pick a coin, flip it, pick a direction, manage it. It moves nicely, gold, at the moment. So I think if whichever way you get into it, you'll be able to get out of it within 2 or 3 days. Virtually if you'd have flipped a coin at any point and picked a direction, like if you went long there, you'd have gone long there and you've gone out there. If you'd have gone short there, you've been straight out. It doesn't matter. As long as this thing's doing this, you could go long at the high there. And if you can scale in twice before it hits the bottom and comes back up again, you're going to get out. So it doesn't really matter, does it? Pick anything, any direction on that thing at the minute. I'm getting an average of 1.5 on the profit factor backtesting. The first 4-hour candle, trying some tweaks to see if I can get it better. So a profit factor is not the same as return on drawdown. Profit factor. Go on again. Shut it. I don't think I've got profit factor out, have I? Yes, I have. Yeah. Right. So look at the profit factor. Yeah. profit factor is 1.24. Return on drawdown is 5%. That's calculated totally differently. If you're getting a profit factor of 1.5, that's really good. Really good. But I would expect you to get a higher profit factor on a higher time frame. 1.24 on a 5-minute strategy is bloody good. Anything above 1.15, I would class as on a 5-minute strategy, good. On a hourly or above, I wouldn't touch anything under 1.82, ideally. 1.5 is still very, very, very good, though. Yeah, no, I would touch 1.5. That's a lie. 1.5 you will quite often get during initial testing. So if I test an H1 strategy or an H4 strategy, I will run a system parameter permutation test on stuff that gives me a 1.5 profit factor and try and improve it. And as long as you can improve it and then replicate that over an out of sample test and on multiple instrument tests and possibly multiple time frame tests, that's good. But on the 4 hour, you should be able to get 1.5. But you've got to do a system parameter permutation test to make sure that that 1.5 is not the outlier, and every other permutation produces 1.1 or lower. And you've got like a 1.3, and then you've got a 1.5. So if you run 100 tests, 2 of them are that, everything else is that or below, that's not a robust strategy. That's an outlier. You've got to think the bell curve. 60% of your results, anything within the 60% range of your results is very highly likely to be reproducible out of sample, multiple instrument, multiple time frame, or certainly in the future on the time frame that you're testing on the instrument you're testing. Anything outside of that 60% bell curve is an outlier and likely produced by the market movement on that period of time. So when you take something in a bell curve and reproduce it in an out of sample test, you won't get the same results. You'll get something falling way back within the bell curve. So these often don't work. Occasionally you will find some that do, which is what I found with the ORB. But you will find that the further out of the curve you go, the more stagnation you will experience in out of sample testing. If you use stuff in here, which will be less profitable in the bell curve. So there's 300 here, yeah? 300 results here. So let's do the math. So I've got 312 results times 60% is 187. So what I would be looking for is everything that is within, what's 187? I'm just trying to do the maths. How do you do the maths on this? My brain's not working today. Done this wrong. Hang on one sec. 312 minus 20%. Either side, yeah. So 62. So anything in this list that falls above 249, which is there. Yeah. And what was it? 312 times 20% is 62. Below 62, which is there. Right, so anything in this area here, from there down to that other green line that I drew, falls within 60% of the results. So we take 20% of the highest results. We take 20% of the lowest results. These are outliers. The chances of anything you pick, in this case, under a 3.06 return on drawdown, has a very high probability of working when you retest this on a time period that you've never used before. So this is tested over a period of a year from 2021 oh yeah, March 2021 to March 2022. So this is tested March 22 back to March 21. Yeah. So I've left myself from March 2022 to date and anything before 2021 to use as out of sample testing. So when I use that bell curve, I can pick things which fall within that 60% and retest those settings on those two areas. And I should get a variance of results somewhere around what I got, but anything 70% or above of what I achieved. So let's say, for example, I got a 3.06 return on drawdown on the test on those. So those settings I chose. Yeah. If I got a return on drawdown 3.06 times 70% of 2.14 or above, I would consider that robust. So those settings are robust. So the initial testing I did, an optimization gave me a 3.06 return on drawdown. I took those exact settings, those exact entry criteria, target, stop loss, trail, whatever it may be. I replicated that over a time period the EA had never seen before in the future, and I'd never seen before in the past. If both of those tests produce a result of 2.41, which is 70% as good as the ones I got initially, that's robust. If I then take that setting and replicate that from the DAX over to the NASDAQ, the Dow, and sorry, this is futures, the NASDAQ, the Dow, and the S&P, if I can produce 70% of that again, so bearing in mind we've got data variances and all sorts of stuff, that's again robust. So I know that those settings will work on any instrument I put it on, but I'm never going to achieve the results I got in the first place. Every now and again, you will get a set of results in here that you will pick, and it will produce a better result out of sample and a better result out of sample. And you'll put it on the NASDAQ and it will produce a worse result out of sample, but that's still robust. If it does better than when you initially tested, you're not going to be unhappy, are you? And that's what goes into developing strategies and building EAs. That's why I don't have many strategies or EAs, because there's very few systems and strategies out there that will pass robustness testing like this. So your one, Brian, if you're getting a 1.5 there, you're probably getting something like a 7 to 10 return on drawdown, which is phenomenal. But try and get that replicated out of sample. If you can replicate it out of sample with the same settings, happy days. But don't go for 1.5. If you get a 1.3, let me know, because we'll obviously we know what to do with it. Just use it. So yeah. On what basis you repositions your trade when you're in drawdown? I don't know what you mean, Ms. Samuel. Repositions my trade when I'm in drawdown. Go to the website, and there's a link at the top called the Position Trading Handbook. Go and read that. Maybe you haven't watched the bootcamp yet, but that tells you how to learn what I do. That was nice, wasn't it? I like that PDF. Are you trading ADR reversals and mean reversion strategy also on indices? No. I don't trade indices. The indices, now that we're in a bear volatile market condition, I think you can. What we were in, which is what we spend 80% of our time in, is a bull calm. So when you're in a bull calm market, which is basically a trending market, you will find it very hard to get out of a short. You'll be squeezed all the time. So I trade the indices with another strategy, which is a pullback strategy, which is basically a position trading strategy, which is long only, which I don't use at the moment. I'm waiting. In fact, I'm pretty much ready to get back into it. I think we are probably going to start to rally from here. I'm just waiting for this debt thing to go with the US because I don't know how that's going to affect the indices. But in this market, you could, I think, position trade. And here, where this is a bull volatile, bull calm is very small ADR rallies. Bull volatile is big swingy rallies. Yeah. You need high movement and market structure to position trade. Typically, the indices don't provide that, which is why I don't. I've tried. All I would say is back test it. Right. This is a great example of back testing and why it's important. Back test over different market regimes, as they're called. I'm just trying to find my ATR. So look at the ATR in a bull calm. Yeah. And then look at the ATR in a bear volatile. Yeah. So this is a bull calm market. ATR or ADR, as we're measuring here, because it's the daily chart, is there. As soon as you go bear volatile, your ADRs pick up dramatically. And this is why we use ADR. We never use pips, because the pip count here is totally different to that. If you use a strategy that is based on pips, when this changes from bull calm to bear volatile, your strategy will just get stopped out 100% of the time, because the market will be moving 3 times bigger than it was when you developed your strategy. Again, out of sample testing. If you get a strategy that works beautifully there, you replicate it there, guarantee you 100% it will not work, because the market conditions here are completely different to that. It's almost as if you're trading a completely different instrument. Yeah. So this doesn't suit position trading. This does suit position trading. But when do you decide, we've entered the market, bull volatile, I will start position trading? How do you know when you start position trading, it's not just going to go back into bear calm? And these flip wildly. And you can't tell when it's going to come out. Look, it looks like it's going back in now. Look, we've dropped back down into bull calm. In fact, we're down at the lower levels of bull calm at the moment on the S&P. So it looks to me as if we are starting to get back into a trending market. We have the odd holy crap like COVID. Yeah, we have the odd drop, which is a profit take. Yeah, I buy the profit takes because the rallies always come. This is when we're talking about Warren Buffett. This is what Warren Buffett does. Buys every dip on the S&P because he knows that the stock market is going to go up. Because if the stock market doesn't go up, the investors lose money. Investors don't lose money. Businesses, stock prices don't go down. They go up. Because if they're not producing more profit for their shareholders will sell their shares, which makes their share price drop, which makes their business unprofitable. That's why the S&P does what the S&P does. It moves up. And it will keep moving up. It will keep doing it. It will keep going up. Yeah, we're back in 2012. We were trading at 13.23. We're trading at 41.54, 41.45. 41 or 42, something like that. In 2 years' time, we'll be trading at 50 something, 5,000 or 6,000 and something. In 10 years' time, we'll be trading at 10,000 and something, and it will keep going up. And this is why we have more numbers. That's what the stock market does. You have to identify when is the right time to be in the right strategy. Position trading is hard here. You look at other things. Yeah. You won't find there's an awful lot of difference in most other, in a trend, obviously, you get a higher ADR. But you'll find that with most other instruments, there's not that massive sustained shift where we are down here and then we stay up here for years. We stay there for a small period of time. That's Liz Truss. Forget that. That's COVID. Forget that. So again, looking at outliers, yeah, these are your outliers. Yeah, any strategy you developed during COVID or during Liz Truss screwing up the UK economy isn't going to work in a normal market. Bell curve. Concentrate on this bit. This is where everything's repeatable. Rinse, repeat, do it again and again. You're always going to make money doing that. So yeah, so you find FX markets, they don't have the same variance. We have actually a little bit on the US dollar, but it's, you know, it's pound New Zealand. Look at this. Pound New Zealand used to trade at over 300 ADR back in 2000. I have to go back a bit further. There you go. So we used to trade at over 300 ADR on the pound New Zealand for a good few years. And we were then trading down at the 200s, 250s. Then COVID hit. And since COVID hit, look at where we are on our ADRs on the pound New Zealand. We're now sitting down at, that's the RSI dash, we're sitting down at 150s. We were trading 350s. So again, this is why you use ADR, because if you don't measure your market movement in the averages and you measure it in pips, this is 50% of what it used to do. Yeah, any strategy developed on the 350 ADR isn't going to work in a 150 ADR environment if you're using pips, because the pip range is totally different. So, but that's why I don't trade indices with it. But you could, I would say, just backtest. Go and backtest it. Prove it to yourself. Mumo, what challenge did you do and what were the settings for ORB? We called a Mumo, sorry, yeah. Is return on drawdown called something else on the backtest tab? No, there isn't a return on drawdown. You have to calculate it yourself. The backtester will only give you no idea what this is set up to do, so ignore it. But so the backtester basically a few results in it. Oh, stop it. So when you export your results out of here, you will get a profit factor column. So it's just basically copy all, export all of that. You'll get a profit factor, which is there. Yeah, so the profit factor is 1.99. It produced 5 grand, drew down by 5 grand, but the profit factor is 1.99 on it. So there's different calculations. Best thing I to do is Google it. Google the difference between return on drawdown and profit factor. There's lots of other ways of measuring this as well. You've got there's a few different ways investment houses and things measure return on drawdown. I like return on drawdown because I'm interested in how good it is compared to when it's bad. And return on drawdown means how bad has it gone and how good does it get. So if you've got a very high return on drawdown, it means that you're going to have quite possibly outliers in there because you've got big spikes and then drops and then big spikes. When you've got a lower return on drawdown, somewhere in the 2 to 3 area, you tend to have that nice equity curve, but a little bit more stagnation. But it's your return on the drawdown is lower, but your drawdown also tends to be lower. So when you see a return on drawdown number dropping, you tend to find the drawdown drops along with it. So it's more comfortable. And again, when you see these EAs sold on the marketplace and they have an input, which is risk, and it goes, do you want risk setting 1, 2, or 3? And you've got no idea how it works, what it's doing, and you get told to pick a number and cross your fingers and hope this thing won't blow your account. Yeah, what this is typically doing is going conservative, normal, risky. And what it will be is a low return on drawdown, a medium return on drawdown, and a high return on drawdown. The high return on drawdown will go bigger drawdown, but bigger reward. Everybody goes for this one because this one always generates way more money. However, what you don't realize is if you start using it, when it's going to go into the big drawdown, all you're going to see is that. You won't hang around for that, which is why everybody's system hops. Got a video on that. Yeah, that's why I use it. All it is you take the profit, divide it by the drawdown. That gives you an return on drawdown figure. Very different to profit factor. Go online and just Google how they're calculated and what they are. There's no right or wrong. If it's positive, it's working. If it's negative, it's not. That's all you need to know. If you don't get a positive number, however you measure it, it's not working. But that's not the be all and end all either. You need to look at other factors like stagnation. Yeah, if you've got a really good strategy with if you get a 3.04 return on drawdown, and it goes like that for 6 months, and then it goes like that for 6 months, and then it goes like that for a month, and then it goes like that for a month, and then it goes like that for 3 months, and then it goes up like that. Is that a good strategy? Overall, if you are happy to sit there, let this run and make money, yes. If you want to win every day, for that 6 months, you didn't make a profit. If you're trading prop, for that 6 months, you didn't make a profit. If you started a prop evaluation with this EA for that 6 months, you sat there and went, this is useless. However, if you started it here, you were like, this is the holy grail. What you haven't realized is you've got to sit through that for 6 months, and then you're going to have 2 months of loss because there is no profit curve that goes like that. So not using a stop loss. Position trading, you can get close, but you're not going to get that profit curve. You're going to get that profit curve. That's what a position trader's profit curve looks like, because you're not taking losses. You're not hitting those long drawdowns. So there's so much that goes into it. This is what I mean. Like I say, in the bootcamp, you could do the 20 hours or whatever in the bootcamp and all the videos and everything in there, but it's just the tip of the iceberg. You need to spend years in this to understand everything. You'll suddenly find something and do something, and you'll think it's amazing, and all of a sudden you don't know what those pitfalls are until you find them, which is what prompted this conversation today about the sort of 3 types of trades you're going to get into a position trader. It's not all going to be get in, get out. Some of it's going to be get in for a week and get out. Some of it's going to be get in, get out, get in, get out. Brilliant. Some of it's going to be get in, sit there, sweat, have to do some work. Oh, I've actually got to press a button and do some drawdown control and then get out. Yeah. There's only 3 things that are going to happen. A lot of people are experiencing this one for the first time, which I can understand. There's a lot more people coming in the live room, so there's a lot more people doing it. Possible GJ long. I don't know. You keep asking me about GJ, don't you? You're one of those. Are you a secret Raja Banks trader? That's all he trades, isn't it? With his 20,000 followers who are buying his courses and trading with his brokerage, which he makes all his money out of. And he trades GJ. I don't know. For me, I'm a mean reversion trader. This is in a range, and it's not extended, and it's not likely to revert to any mean because there's no extension on it. I haven't got an entry. You could have taken something there, but you wouldn't have got into it until about there, and you would probably have added 63. No, you wouldn't have. You'd be in profit, but hasn't been any entries on this for me. And that was the last one there. And I exited it manually because it sat there for 5 days and RSI returned to the mean. It didn't go anywhere, so I shut it. I've already covered gold. No. Wait. If you want to trade gold today, if you want to know which way gold's going today, at 130, put a buy or a sell on. So 129, put a buy or a sell on. It's going up or down because it's news this afternoon. Brian sent me his set file. I'll have a look at that. What have you been testing it on? What instrument as well, or instruments? Do you have any? Did I have a shandy last night? No. Why? Did I have a shandy? No. Is it because I'm a Southern shandy drinker? I don't drink shandy. EU. Okay. No. I don't have any shandies in the week. I have shandies at weekend, but I take the lemonade out of them. Raja trades gold. Does he? I thought he just traded pound yen. I thought he was... I only ever seen him trade... gold. Pound yen. Where's his lives gone? Owns it. Well, you know he owns it. Oh yeah, look. Simulation FX gold. Oh. What's this person selling? Drop shipping. Gold, yeah. Who trades pound yen then? Someone else, I thought it was him, but... Okay, Aussie New Zealand's holding. Hold. Here we go. So that is you just got the arrow there. So that is the reversal alert retest. So that was the initial reversal alert. This is the first time we've broken back down below that reversal alert. So that's your retest. It's ugly, but that is your M pattern. So not very convincing at the moment, but the market is watching. We've got a new lower high. First lower high, I think you'll find we've had for 12 days. Might not be, but I might be wrong. So high, lower high. Let's hope. If we get an inside bar, what I'd like to see today is something like that. Yeah, because the world and his wife will be looking for an inside bar break to the downside. Very nice. He does both, does he? All right, yeah. I've only ever seen. I don't. Obviously, I stream, so I don't watch people streaming live. But I know Roger Banks' stuff. I've done his. Well, I've not done his course, but I've looked at his course, and it's exactly the same as all the others. Give anything away that you don't already know, really. So it's all free on YouTube. Everything that he sells, apart from his brokerage, obviously. What recovery mode of OR? That recovery mode of ORB looks very good, trading on inside bars. Do you let it trade inside bars until turn into profit, or just limit how many inside bars it trades? So at the moment, the logic at the moment, as you can see on this DAX, is you set a end time. Okay, so what it will do is it will take the initial ORB, pre-market ORB. If that is a profitable trade, that's it. You're done, right? So at the moment, the logic I have in the EA is every candle, check profit. If the profit is greater than 0, delete all the pending orders, turn yourself off. That's it. Come back tomorrow, right? What I'm going to do is I'm going to put an input in the settings so that you can choose that figure. So I would just set it to 0 still, me personally, because if I've made money, I've made money. That's it. But if you were saying, if we get a move up and move down and it makes $50, that's not enough. I need to be making 250 a day. You can set it to 250. So if the initial ORB works, brilliant. That is then monitored every candle. If it's a negative or below that amount, it will then wait for an inside bar. There is your first inside bar, and it will take that break. Yeah, and then when that trade closes, if we are above that, we stop. If we're not, and that was a stop out, we carry on and we will take the next trade. There. And we will take that break. That one would have stopped out either in a small loss. That would have actually stopped out in a small profit. Have we made it to our profit yet? No. Okay, carry on. There's your next inside bar break. We broke to the upside. We're still in that long at the moment. Yeah. When we get here, it will automatically close all open trades, cancel all pending orders. Whatever you've made. That's it. Yeah. So those are the two. That's the logic at the moment. It either closes when you close the last trade, and i.e. we are flat, there's no trades on, look at the P&L. Do I need to carry on? Yes or no? If I get here, regardless of what my results are right now, stop. So you can set this to whatever you like. The reason I'm stopping it here is because New York takes over. So I don't want to be trading the DAX during the New York session. I want to be trading the NASDAQ or the Dow or the S&P or all of them, depending on how risky I am. So that's why that stops there, which is 2 o'clock UK time, half an hour before New York open. But if you just want to trade the DAX, and this thing's right now sitting here and you've got a negative balance of 600, and by the time you get down to here, you're sitting in negative 100. If you want it to carry on, obviously the DAX will move via the New York session. So when the New York indices open and we get a sector purchase driving the sectors higher, the DAX will have those stocks in. The DAX will also drive higher. So it will carry on, obviously. So you could just stay in the DAX. Up to you. You know, my EAs, I don't force you to do anything. My EAs, I teach you how to use them. I teach you what they do, and then you can do what the hell you like with them. There is never any setting that works perfect. You're not going to find it. So you trade how you want to trade and use it how you want to use it. But I will put all the inputs available to you to make that decision. Yeah, so your end time. So re-enter after this time. So that time there is 10:05 because the range end is 10. So what I'm saying is after this candle closes, look at the profit at 10:05. Is it positive? Yes. Brilliant. Don't do anything else. Is it negative? Okay. From this time onwards, I want you to start looking for inside bar breakouts for me to try and get us back into positive territory. When you've done that, stop. That's the logic. Yeah. It's designed to be loss recovery, but you have to obviously understand it could be loss expansion. If the initial ORBs made you 2 losses and you're sitting at -2%, every single inside bar break could fail, and you could easily go down to -4,500, -4.5%. Yeah, which is again why we have this input. Close everything and stop at this loss. So if you set that to -4,500 and everything goes wrong and it hits that, it will just go shut it, stop. this is all going wrong. Stop trading because it's not working today. Again, automatic, don't be an idiot filter. Yeah. If you're losing money, you stop trading because you're not losing money for any other reason than the day that you're trying to trade, the strategy you're trying to trade is not conducive to the strategy. Yeah. So if you are trying to trade a breakout when the market is going like that, you're going to lose. If you're trying to trade range highs and lows when the market's going like that, you're going to win. So if you're trading a breakout trend strategy in a range, i.e. we get a rotation day, you have to stop at some point, because if you don't, there's an opportunity for the market just to clear your account out. If you go into rotation for the entire Frankfurt session, then New York opens and goes into rotation. By the time you get to the end of the day, you'll be 20% down. You've got to have something that says stop. And again, I don't know what your stop is. You know what your stop is. You know how much money you want to lose. You decide. I'm not going to put a filter in here that says stop at X%, because if you're risk tolerant and you're happy to lose 10% a day because you're using high risk, you've got to be able to set it to do that. So, but this is the same as the ORB does at the moment. Yeah, the ORB's got all this functionality, but the way that this does this is very different. I'm looking at a way of potentially putting this into the ORB. I haven't yet. I've got to get this finished and working first. So when I've got that done, I'm then going to do a comparison and go, right, all that stuff I stripped out, how is this going to affect that? And if I can, I will try and shoehorn the inside bar. Inside bar breakout shouldn't be too much of a problem, but it will affect all the previous logic that works on the other one. So I'm 90% sure that what will happen is your test results you achieved with the previous version won't work the same with the new version, because it will be doing the loss parameters, closing things out parameters all differently. So I'm reluctant to break what I've got, because what I've got works. This is the problem. I've just found a way of potentially making money. And you know, this is what the idea of this is, as you saw this morning. The ORB strategy is, you know, we're in trades for hours sometimes on the ORBs. I've got ORB trades, which I think there's one there. Look, that was over probably an hour or so. That was a normal ORB break yesterday. It would have been an ORB break yesterday on the normal opening range breakout EA. On this one, done in 5. Literally, you're done in 5. Maybe 10 or 15, but you're definitely done in 15. If you're not done in 15, it's because you've had a whipsaw. That's when we start to try and recover the money. The opening range breakout EA already does that, but it does it in a different way by trying to re-break that initial range, because we're assuming if we've whipsawed, we've entered that range again. What I found, which is what led me down this path, is we're not always re-entering that range. So we don't always get that next break, which led me to try and instantly flip the opposite direction as soon as we get stopped out. What that did was, first of all, it confused the EA sometimes because it couldn't get those trades on fast enough. And secondly, you find that you just go long, short, long, short, long, short and die, which is why I thought, actually, if we just use a signal which is known as a pause to re-enter, that's probably better, which is why I've got the inside bar break as the recovery system on it. So the amount of work I've put into this and the amount of I've stripped, changed and broken from the opening range breakout EA, I get the feeling if I try and put this back into that, first of all, it's going to take me weeks of testing to test all the initial functionality actually still works. Then I've got to test all the new functionality and figure out if there's things there which affect the previous functionality. And if so, then I've got to find those bugs and fix it. So I'm happy to do that, and I probably could do that. But it's a 2-month process, so this is going to be released. Probably, if this works this afternoon, it'll be out tomorrow. I'm not going to do that because I need to test it more. But you know what I mean? If there's a conflict, I understand people are going, well, it's just releasing the same thing again. It is, in a way, but it's not. So I'm probably going to get flack either way. Can't win. I never can. But, I don't know. This is what I was saying the other day. I really need to take a week off so I can sit down and focus on this, because I spend 2 to 3 hours in here, do a little bit of work, spend 2 to 3 hours in the afternoon, do an hour's work. I'm getting 2 to 3 hours a day to try and do stuff. And I have other things to do as well with my life, not just 100% trading. And I'm trading as well. So I just want to take some time to figure out what to do with it. But like I say, you can replicate this very easily in the current existing version of the EA. The thing that it won't do is take those extra ones. But if you had the Price Action Toolkit, yeah, I don't know if you've got the Price Action Toolkit, but a workaround you can use if you wanted to, again, it's up to you, but the Price Action Toolkit. Price Action Toolkit does the this is where the opening range breakout EA originated from. We had this initial opening range thing in here with one entry, and I was like, this is brilliant, and this works absolutely. It's lovely, works perfectly. But then I was like, how can we improve it? There's way too much functionality in here for me to start shoehorning tons of extra functionality into it. So that's why I thought we'll just take this concept out of the Price Action Toolkit and we'll make our own EA with it. Brilliant, done that. But in here, in the Price Action Toolkit, you have draw candlestick patterns and you have an inside bar. Oh no, it's a 2 inside bar. Yeah, it's not the same thing. So you've got what's called a 2 inside bar break, which is a much stronger signal. So in the Price Action Toolkit EA, you can trade 2 inside bars. So a 2 inside bar is a movement up or down, yeah. And then you get an inside bar followed by an inside bar. Yeah. That is what we break, yeah, which is a symmetrical triangle contraction over 3 candles. So it's a candle, a smaller candle, and a smaller candle. That break is 0.5 on a symmetrical triangle, which is what the symmetrical triangle strategy that I created the indicator for trades. So this EA, the Price Action Toolkit EA, can trade 2 inside bar breaks, which you will also get. So what you could do if you wanted to, and this is a convoluted way of doing what I'm building, is you can trade the ORB with the opening range breakout strategy. Just take that first one. Don't go into continuous mode. So you only take the first trade, turn off continuous mode, and it will just try to go and get your breaks. If it works, great. If it doesn't work, you can put the Price Action Toolkit on the chart and ask it to trade 2 inside bar breaks, which is very similar to what we're doing, except 2 inside bar breaks are a lot less frequent because they are a much stronger signal. There isn't any here. You won't find as many. There's one. No, that's an inside. See, that's an inside bar break. Outside bar, inside bar, break. What you would need in that case there is an inside bar on the inside bar. When you get an inside bar on an inside bar, it's basically whatever has happened before, the market has stopped for some reason. It can't contract forever. Yeah. And what you're finding here is it's just a tight accumulation phase where they are accumulating orders and they will have a book built long or short within that space of time. And their book will say long is 1 million, short is 1.5. The algo will take it short, which is why the inside bar, 2 inside bar breaks work so well, because you've gone through that extra level of contraction, which means the move is much more explosive. They're a really good candlestick pattern. There's an inside bar there. I'm just trying to find a 2 IB, but there isn't one. Almost. That is almost one there. Look. Inside bar, higher low, but it's got a tiny higher high. Then we went outside bar. So that would be a failed 2IB break. Then it broke. Yeah, so contraction, break. That's what it's designed to do, to catch those. And again, like any strategy system, it will fail. It doesn't work all the time. It'd be lovely, wouldn't it? There you go. Mumo, in my opinion, do a different EA. Combining both could be too complex. Yeah, I mean, this kind of, again, part of my problem is I'm too OCD with everything. I haven't got OCD. Maybe I have. I don't know. I explain everything to the intricate detail. I want control over everything. So everything I build is thoroughly tested and has more inputs than it needs to make sure that it's 100%. You can do everything you want with it. With that comes infinite complexity. And I understand not everybody's as experienced as I am in the markets or as computer savvy as I am. And I build stuff for me to use myself, and I overcomplicate things because I know that I'm not going to use all those inputs, but it's just easy to leave all those inputs in there because someone might want them. But then what that brings is 1,000 questions. So I don't want to overcomplicate or over-engineer things. I want stuff released which is like, this is the pre-market 5 strategy. This will take a trade here. If you press this button, it will take 2. Yeah, there's no other options. Yeah, it trades the 5 minutes before. That's it. No control over that. That's it. That's what it does. It's the pre-market 5 ORB. Right. After that, you've got an option. Do you want to take a loss recovery system, or do you just want to take the loss there? Yeah, brilliant. That's it. What's your TP? What's your stop? No other inputs. Then it's like you can't break it. The only thing you do have to change is the time. So that obviously is nothing I can do about that. And I've also stripped out functionality for entry methods as well. So you'll see in this one, use money as risk. Yeah. Or a fixed lot. No pips. No pips anywhere. You want to use a fixed amount of money. I'm on the verge of stripping that. I don't think anybody should ever risk a fixed lot size, because the difference, if you have a range like that and take one lot on that, what if the range was that and you take one lot on that? Yeah. Your risk is going to be totally different monetary wise on those 2 entries. You should be risking an amount of money based on what that range is. So this is not a good idea. For testing, for robustness testing though, taking a flat lot size is actually good for certain things. So that's why it's in there. But I don't even think that should be in there. How much do you want to risk? And what percentage of the opening range do you want to put your stop at? Like 100%, 110%, 150%, 200%. Simple. That's what works. I know. I've tested the crap out of this. If you don't trust me, don't trade it. Yeah. Everybody always thinks in everything to do with trading, they always know better. It's one of those industries, isn't it? Doesn't matter how many times you get something right. When you get it wrong, they're like, ha ha. It's like, well, yeah, I'm not perfect. I get things wrong a lot, as everybody does. But everybody knows a better way of doing it. You're using the 14 RSI. You should be using the 7. It's much better. Go on then. No. But you need to switch because you're missing out. This is why. And you get pushed. Like, build this, test it. Have you tested it yet? No, I haven't. I'm busy. I've spent 15 years developing this thing. I'm happy with it. Leave me alone. And I want to give everybody everything that they can do to do all of that. And I realize that people shouldn't have that power, because with great power comes great responsibility, and you can blow things up very, very quickly with it. So I'm trying to scale it all back, if you see what I mean, into simple things. Same. Make it into a new strategy. Yeah, I mean, I'll see. I'm torn, so I will see what I can do with it. I might be able to put the 2IB, the inside bar as an additional thing on the old version as an upgrade, if you like, which is be optional because it's a separate function. But the initial opening range breakout function has been completely rebuilt. That's the bit that with the pre-market, this new version, and how it adds them, removes them based on things, that's all changed. So the other bit I probably can add in, which I probably wouldn't have a problem doing. So the loss, call it a loss recovery system. But the thing is, the ORB already has a loss recovery system in. It has continuous mode, except continuous mode works on the initial opening range, whereas the inside bar means that we can take another range somewhere else when the market has taken a pause. That's the upgrade, if you like. So you'd have to turn, this is what I mean, it doesn't work if you've got continuous mode on. So what I'm going to get is people going, using continuous mode, which is what they've been using. If they turn on the inside bar thing, you're going to have a conflict because it's going to go, is there a pending order on? Yes, because that guy's in continuous mode. Okay, I won't take the inside bar. The inside bar break will work. It will fly through the continuous mode. You won't get the trades triggered. And then everyone will go, well, it doesn't work. No, because it's not designed to do the same thing as that. If you turn that on and that on, it won't work. So I've got to tell people to turn that off at the same time as they turn that on, or that on and that off. That won't happen. And that causes confusion and bad trades, more importantly, right? Losing money, which is not the purpose, is it? So I don't know. I need to really spend some hours studying and trying. I'm using the pre-15 set for the US Open. Yeah, that works really well. When I initially built it, and the strategy that's on the website for the opening range breakout, it's all based on the 5-minute initial open. The whole thing revolves around this candle, which is the first 5-minute candle, and that continuation mode, that break of that level. And it works really well. All the set files work on that. And then I developed a pre-market version of it, and it suddenly was like, hang on a minute, this works as well, but faster. I haven't got to sit in it for 3 hours. I can get in it and get out of it in 15 minutes. And then other people, and me as well, did some testing on just that 5, which is sometimes a tiny, tiny little range and not very good, because you just get one candle that does that and you're dead. That's why I put the inputs in there for distance. And then all of a sudden, when you start trading that one, you realize actually for prop, which is why I built the thing, was initially for prop evaluation, for passing prop. That passes prop in a day sometimes. So it was a case of, well, you know you're going to fail on prop. So the days you pass, why not do it fast? That's what the pre-market 5 was. And that's why I started falling down this rabbit hole, which is what I do. I find a variation and I follow it. I'm a bit like the genetic test. So I liken myself to in the strategy tester, when you go, I want to use the genetic algorithm. So you've got 2,500 variation system parameter permutations. And what it does is the genetic algorithm goes, I'm going to test, I'm going to test, I'm going to test. I've found one that works. Okay, what I'm going to do is, instead of going and testing everything, I'm going to take this one that works and I'm going to test 10 versions of that, because this is profitable, these aren't. So I'll go down this route, and it tests those. And then it goes, well, that one was the best one. Let's test 10 variations on that. And the genetic algorithm, as it suggests, finds the best version of the adult and enhances it. And then it finds the best version of that one. And you end up with getting a parameter permutation test based just on the cream of the crop, like the Aryan child type thing. That's what I'm like. As soon as I build something and I test something and I get it working and I start using it, I identify things that are like, hang on a minute, wouldn't that be a better way of doing it? And I go and test just that thing, and it explodes off, and I go, wow. And I dump everything else, because there's only me. I have so many little branches of EAs I'm building and testing and everything while I'm trying to trade, that I go down these rabbit holes, and that's the one I'm in at the minute. which is why I'm building this thing. So I'll come and work for you. The trouble is, I'm my business, if you see what I mean. It's a bit like a plumber. Yeah. When you start up as a plumber, you become a plumber and you work for yourself. You might employ a apprentice or something, but at the end of the day, the plumbing firm is you. I am the market structure trader. If I decided not to do this anymore, the business stops working because it's me. I can say to you, try something, but I can automate all of that in here. I don't need more people. What I need is more time for me to sit without doing stuff so I can concentrate. That's the lack. I can't. And again, if I employed somebody, I would give them a job to do. And then what I would do is go and grab what they'd done, and I would check it all, make sure it's all done right. And then I would verify those results. And I would spend as much time doing that checking and verification as I would have actually done it myself, because I don't trust anybody. Because I'm in an industry where most people are trying to shaft you. So I trust my data, I trust my analysis, and I trust everything I do. Someone else does it, I've got to check it. So what's the point in getting someone else to do it? I might as well do it myself. It's just the way I am. I'm not an untrustworthy person. I don't trust people. My brain needs to know 100% something is what something is before I spend any time on it. Which is, like I say, I probably have got OCD. I just can't stop driving. All it is a way of making not more money, but making safer money. If I've got multiple strategies running and some of them don't work, one of them will. If I'm trading ADR reversals and H1 mean reversions, if the mean reversions get into trouble, the ADRs have probably already got out. They've made a profit, as we're seeing at the moment. Yeah. So you've got to have multiple strings to your bow. If position trading has a bad month, scalping opening ranges can bank me $5,000, $6,000, $10,000, whatever it may be on prop. So you have to have multiple strings. Previously, when I was scalping manually, which is why I built the Price Action Toolkit, I then discovered that actually what I do most of the time is during that period of time. So why not just build an EA to trade that period? Then I wouldn't need to trade manually with the Price Action Toolkit. And that's how you evolve in this. And this is how I've built everything that I've built, is by taking bits and pieces all over the place and going, I know 90% of this is crap. This bit looks good. This came from the TDI. Yeah? TDI looked great. So I stripped the TDI apart, I reverse engineered it and figured out it was just an RSI. And every single signal, shark fin, that Steve Marrow came up with on the RSI, on the TDI, what is the shark fin? It's an RSI cross above and below a level. So why do I need all the other Bollinger Bands, moving averages and everything on the TDI? If he's basically trading shark fins on the TDI, he's trading the RSI. So I'll just use the RSI. You strip all this, every system strategy, everything you learn in this industry is 90% repeated or crap. There's bits and pieces that work, and you just got to find those bits and pieces and realize they're not going to make you a millionaire. They're going to work. Unless you've got £1 million, you're not going to make £1 million. Compounding, prime example. Compounding works on paper. I went down right old rabbit hole with compounding. And it worked really, really well for a period of time until it didn't. And I realized, well, surely if I'm risking more money, when I have a losing streak, I'm going to lose more money. And as soon as that happened, I was like, well, yeah, it's just a theory that doesn't work. Another one. That's all they are. Theories, backtests, hindsight, utterly useless. Hard right edge right now. Where's this going? Haven't got a clue. Oh, okay. So let's build a strategy around I haven't got a clue. That works. It does work. Because I haven't got a clue. Trying to predict the future. Everything's trying to predict the future. The ORB is not predicting the future. The ORB is going with momentum. It's going with the future direction. At the moment, the direction's going that way, so that's the way we're going to go. If it goes that way, we'll go that way. I'm not trying to predict anything. Again, people, not a few people, 5 or 10 plus have contacted me, different people, never spoken to each other, all telling me I need to use a moving average filter Because if I used a moving average filter, go and look at the S&P. If you'd have used a moving average filter on the S&P and filtered out all the short positions, you'd have made a fortune. It's like, yeah, but it doesn't work now, does it? It used to work on the S&P, but right now it doesn't work. Yeah, you can't filter out randomness. All it does is enter another element of randomness. You're removing all the profits of the shorts by using a moving average to filter long. Yeah, but until you've done it, tested it, and I have, and it doesn't work, you won't know that. So that's what I spend my life doing. So sad, aren't I? Bring your shandies. Do your laundry. Oh yeah, you can bring me my shandies and do my laundry. That'd be good. US dollar yen, I don't know. It's nowhere at the moment. Yen pairs are sideways. Test of that level or test of that level. So no more chatter from the yen at all overnight. So waiting for Ueda to give us some guidance as to whether or not they're unhappy with the FX levels, and they're not at the moment because they're not going anywhere. This was when Ueda said, "Oi, stop devaluing our currency," and the market went, "Yes, sir." Since then, we haven't devalued the currency. We haven't powered it up either. Can you not have a toggle continuous mode IB option? You can have one or the other. You can on that bit, but the market, the logic for this bit is totally different. I've rebuilt it. Also, the way that this one works with are we in profit after this is different, and it conflicts with the logic that the current version of the opening range breakout uses. So I would have to remove one of those and rebuild. This is just too, it's really hard to explain, but it's too complicated. Anybody that programs will know. When you strip out a load of code and refine it, that has an impact on lots of other logic, which has to then be tweaked. It might look the same, but you've just taken 100 lines and made it 10 lines and made it just as good or more effective. However, all the other bits around it have changed as well and need to be tweaked. Then you can't go, oh, I'll tell you what, let's just pop that back in there, because this bit, when it's removed, means that all these other bits have to be tweaked back. This bit and this bit, they might do the same thing, but they don't do it the same way. So that's what I've done. It's very hard. I don't know how many thousand lines of code there are in the ORBEA. There's thousands. One line of code to change, to add one thing will have a knock-on effect on some other function. Which is what I mean. If I can put that, yeah, let's go continuous mode or inside bar mode, yeah, and remove that part of it. But the inside bar mode works differently with the profit and loss overall. And the logic is saying, do this thing at a different time, check this at a different time. Everything works on bar break, on bar close, not tick. The ORB works on tick. The new version works on bar close. It's just different. It's difficult to explain to a non-programmer, but it's different. It's the same. It's a BMW in blue and a BMW in red, except this one's got a V8 engine in it and this one's got a 1.6 flat 4. Yeah. You take that engine and put it in there, this one goes pop. Just different. You just have to accept it. Sorry. This is why I get myself into trouble, because I try and explain things and it just causes me problems, because I can't please everybody. As much as I'd love to, there's no way of pleasing everybody because everybody's different. So you just have to accept that some people are just going to be upset. I'm not saying that you're upset, obviously, but I'm just saying, I just can't figure out a way unless I can take some time off and do it. And that's possibly what I'm going to do. I need a break as well. I haven't had a holiday for ages. I've got a holiday coming up in August, but I haven't had a holiday for a long time. And I kind of need to just get to a point where you burn out and you step back and go. So Aussie New Zealand, we haven't gone anywhere yet. We're holding. which is good. I'm happy with that. If it holds, it holds. As long as it's not going up, it's good. Same with the New Zealand dollar CAD. Yeah, we're up, we're off, we're doing well. There's my aggressive drawdown control position. There's ADR. Yeah, that's my average now. So if we get back to there, I've got some decisions to make. So 1:30 this afternoon, be aware, this is all going to kick off potentially with the unemployment claims. So these are all potentially going to move. So watch that news, and I'll be back at 2:20 rather, as usual, for the New York session. We'll trade the US indices, see if we can milk some money out of those. But other than that, I'll be in the Telegram group and working on bits and bobs. So I'll have an update for you later. So hopefully you have a good day. If I don't see you this afternoon, I'll be back tomorrow morning at 7:50 for the Frankfurt session again. And yeah, we'll milk the DAX. All right, have a good one, and I'll see you next time.